Good morning, everyone, and welcome to our 2021 Oregon Municipal Client webinar. We had hoped that this could have been an in-person meeting this year, but unfortunately, Oregon isn't quite there yet to be fully open. So we have decided to do a webinar this year, and I think over the last year, we've all gotten pretty comfortable using technology to accomplish our communication needs between ourselves and our clients, our customers, our students, our city council members across the board. We've all gotten kind of used to that. But wherever you are, I hope you're someplace that you'll stay cool today. It is going to be a warm one. We do have a full schedule today, but before we get started, there are a few housekeeping things to go over. First thing is, anyone who is wanting to receive CPE credit for today, during our sessions, there will be 2 polling questions that you'll need to answer. And at the very end of the day, there will be a place for you to request your CPE certificate. And just a reminder for all the SingerLewak staff that's participating today, you should also request your CPE credit. During the presentations, if you have any questions for the presenters, we'd ask that you please use the Q&A button at the bottom of your screen to ask questions. We'll do our very best to answer all the questions that you may have today. And if not, we will try and follow up with you afterwards with specific answers to your questions. Before we get too far into it, I do want to introduce to you those team members of us that will be actively in charge on your audits this year. So those staff members are, of course, Jessica Luther-Haynes, who many of you may have met before, and Nicole Bourne. Jessica and Nicole are both senior managers with the firm. Joining them in leading engagements will be Mercy Hanson, manager, and Jason Woodward, also a manager. Cyrus Ward, Zach Wilson, who are seniors, and Rochelle Palmer, who is one of our staff members. So those are kind of the people that you'll be seeing and interfacing with in your audits this year. So that's our team. Of course, there'll be lots of other people joining them. I want to introduce them to you. And then before we actually get started with the presentation, I want to invite Rob Schlenner, the lead assurance partner with SingerLewak, to just say a few words of introduction of the firm to you and provide some additional information. So with that, I will turn it over to Rob.
Well, thanks, Brad, and thank you all for allowing me to spend a few minutes of the agenda today to talk a little bit about myself and SingerLewak. So first about myself. As Brad mentioned, my name is Rob Schlenner. I'm the assurance practice leader for the firm SingerLewak. I started my career back in 1984 with a small firm in my hometown of Whittier, California, which audited the local cities. So my accounting roots are in the municipal audit arena. And I joined SingerLewak in 1985. So I put in about 36 years or so with the practice. Our firm itself got its starts in 1959. A bright-eyed UCLA accounting student went to his father's interview with his tax accountant by the name of Phil Singer. And lo and behold, the roots of the firm got started in a small office upstairs from a grocery store in West Los Angeles. So the firm sort of continued on its pathway of growth in the 1960s, 70s, and 80s. We picked up several other household name partners, Norm Greenbaum and Harvey Goldstein, being the top two. So for a very long time, SingerLewak was known as SingerLewak, Greenbaum, and Goldstein. And through the 1990s, we sort of doubled the size of the firm by bringing in all kinds of specialty practices, and we became a top 100 accounting firm in the nation, which we still reside in that space today. We met Brad and his partners and his employees about 3 years ago. We liked them immediately and instantly, and so we've been together now for going on, this will be our second year, I believe. And we couldn't be happier and more thrilled to be not only part of the Oregon region, but also to have Brad and his team be part of the SingerLewak family as well. So, and again, as the assurance practice leader, my role is to make sure that the firm functions smoothly in all aspects of audits and things like that. So as my team has access to me, you all will have access to me as well. I'm happy to take phone calls, email inquiries, or however else I can help out our relationship. So I guess, Brad, I'll kick it back over to you.
Okay, great. Well, thank you, Rob. Yeah, we're excited to be part of the SingerLewak family. Looking forward to working with everybody in other offices in California and Denver. So our first presenter today will be Jessica Luther. She's going to talk very briefly about some of the tools and technologies that we have to help us gather information and work with you through the audit process. So I'll turn it over to Jessica now and let her spend a few minutes talking with you about those items. Thank you.
All right, thank you, Brad. Share my screen here. All right, so as Brad said, I am Jessica Luther Haynes. Many of you I have worked with over the years, as I've been here now for about 13 years with Bolt, Carlisle & Smith, and now SingerLewak. And over the years, we have used many different software programs and tools to help facilitate, streamline, and expedite the audit process. This year, we have made a few changes to those tools. So I'm just going to go over and give a brief overview of what those changes are and kind of walk through one of the major program changes, which is going to be the addition of ShareLink, which replaces ShareFile. So in the previous years, we have used ProFX Engagement to kind of store all of our working papers and to store the trial balance and to help us prepare the financial statements. This year, that program is being replaced with Caseware. In the previous years, we have used ShareFile to kind of share files between ourselves and the auditees. And this year, that is going to be replaced with ShareLink. In the current year, we are also adding a new program, which is called Review, which will be used at the end of the audit to disseminate the final audit product. So ProFX Engagement and Caseware are both programs that are utilized by the audit team to conduct the audit. And the engagement software program in previous years has housed the working papers used by the audit team. It has housed the trial balance that we have been provided by the client, and it has been used to draft the financial statements if that is a service that the entity has requested we provide. In the current year, we're going to be using Caseware to perform all of those services. So what does this actually mean for you? Well, at the end of the day, not a whole lot. At the end of the audit, if we are drafting the financial statements and we provide you with the trial balance grouping reports to tie out the financial statements, those are going to look a little different this year. Formatting items are going to be changed, but beyond that, it's really not going to have a significant impact on you. For us, however, it means additional conversion time at the start of the audit, and additional time will be needed to prepare for your audits. So just something to be aware of, that we do have a few internal changes that are happening at the firm. Then ShareFile is being replaced by ShareLink. So both programs are used for secure file sharing between us and you. The benefits of ShareLink, well, in previous years, we would send you a PVC list in Excel, and you would upload all of the requested items to ShareFile. And ShareFile, it didn't really have an easy way of categorizing those between the audit sections. So we would have to go in, or you, and create separate folders for those. And it didn't really tie together the items requested versus the items received. And so SureLink kind of has more compatibility there in that it allows us to actually upload that PBC list, and it allows you, as you are uploading items to give to us, to assign those to the items on the PBC list. It also allows for easy communication between ourselves and you, and allows for tracking of that communication all within one system. So each of you is going to receive a link to set up an account. You'll have to set up a username and a password. And as the audit progresses, we will be making our additional requests within the SureLink software. So this is what the login screen looks like. And you'll hit the login button over here. And it's going to, I already have it open, but it's going to pop over to something that looks along this line. So Nicole was kind enough to set me up as a user on the City of Silverton's. So thank you, Nicole. And so this is what your screen is going to look like. As auditors, our screens are going to look a little different because we have many different clients that we're dealing with. And so you'll see active engagements, and you'll have the 2021 audit. And then as we go on and other years are added, you'll see other years as well. You'll have your team members here. So if you have multiple people within your finance department who are active users and have been set up with logins, they'll be listed here. And then over here, you'll have your SingerLewak team. Currently, Nicole Bourne is the only one that is an active user in this, but if others are added, you'll see them here as well. So along the engagement, this is kind of a summary of items outstanding and where the engagement is at. So for the 2021 audit, you'll see this first tab and it says My Assignments. So this is kind of nice for finance personnel because within your department, you can actually make assignments to your staff members to help complete these tasks. So let's say you have an AP clerk and you want her or him to complete the AP section. You can actually make that assignment within the software program, and it will notify them that you want them to complete these 5 items or however many it ends up being. So this will show the number of items you have been assigned. This is kind of the status bar and shows currently that everything is outstanding. We have not started the audit yet, so everything requested we still need. As it progresses, you'll see that this kind of changes color depending upon how many items are outstanding, whether they've been fulfilled, rejected, all those. Here, it has the number of items that are outstanding. You'll see that there's 46 outstanding. Makes sense because we haven't started the audit. Here, this is items that are fulfilled. So these are items that you have uploaded and you have marked on that PBC list that, yes, I have given you what you need and I have marked it as fulfilled. Over here, we have returned items. So if you did not upload exactly what we needed, we can reject it within the system and leave a note and tell you, exactly what was incorrect about it or what we actually needed. And so this will summarize returned items. And then these items, so you have uploaded them and marked them as fulfilled, and then we've gone in, reviewed them. It's exactly what we need. And so we have marked it accepted. And so you'll see that here. And then here, these are items that are past due. And so you'll have a certain number there. And then over here, you have the due date of the engagement. So to actually see what we requested, if you click on 2021 audit here, it takes you to this other screen. And so over here, you actually have the items that we have requested. You'll see the various categories, and you can choose to minimize this and see the overarching categories, i.e. the audit sections that correlate to the items we have requested. You can also hit the same button to expand them all. So if you click on one of these items, you can, over here, you can either click the attached button and you can browse to where you have saved it on your desktop and upload it. You can also drag and drop it here, or you can drag and drop it here. Once you have completed that, you can change the request status to mark it as fulfilled, and it will notify us that I have completed this task. You'll see here that it has the name of the request, and then right below it, it has additional information on that. So on like the check register, well, it's simply labeled check register. That's not very descriptive, but underneath it, we say, please provide a check register for this period in PDF. So it gives you that additional information. Over here, you can also add assignments. So if Kathleen was in here and wanted someone else to do it, she can click and select who is going to actually complete that task. If you have attached something, it's going to show it here, your attached files. And then down here, it has kind of the comments and the history regarding this item. So Nicole created it, she edited it, and then she moved it from one class to another. Up here, this is where you can make comments, or we can make comments and send it directly to you saying, you know, we needed something else, or whatever it may be. And so that's kind of this section here. Over here, you can choose to select them all, and you can mark them all fulfilled. I wouldn't really recommend doing that because then we're obviously not going to get what we need, and that's not going to be very helpful. But you can actually go and download any attachments that we have uploaded. So if we have requested that you provide us invoices for 50 expenditures, you can go here and you can download all of the firm files we have uploaded to an Excel file or to whatever type of file. And it will actually go through and download anything we have attached, and you can modify it or use it from there. Up here, you kind of have the status of the engagements. So as I noted before, all of the items are currently outstanding. And so blue is outstanding. Well, fulfilled is yellow, returned is red, and accepted is green. And so as this progresses and as you start fulfilling these requests, this status wheel will change and be modified according to these various colors. It will also track total requests over here and once again update the number into each of these categories. Along here, each one of these corresponds to an item requested. And so as they're fulfilled, once again, this will also be updated according to the colors over here. Down here, you have the option of filtering the requested items. So if you have fulfilled many of the requests and you just want to know what is left over, you can unselect fulfilled and it will filter out those items that you have actually completed and leave only the items that fall into these other categories. For example, if I hide the outstanding, obviously it all goes away because everything is outstanding. Up here in the corner, you have these three little dots and you can change the display. So you have the option of having additional information shown for each of these items. So remember earlier when I clicked on this, it showed over here additional information, so the time period that we needed it for. Well, if you want all of that information showing at all times, you can change your display so it shows over here. In that same area, you can also change if you don't want these numbers showing, you can hide the numbers. So it won't have a 1 next to signed engagement letter or 2 next to the other signed engagement letter. I wouldn't really recommend doing that just because if we are asking about a specific item, we might refer to it just by the number. And so it might assist us in being on the same page if you kind of leave those showing. Up here on the 3 dots, you can also choose to export the PVC list. So it's going to preview this, but here you can export it to Excel, PDF, you can print it, you can change all of these different settings, but it's got the various categories. It has the request ID number, the name, the more in-depth description, the status of it, due date, etc. If you have been assigned tasks or want to know who is assigned tasks, you can also highlight my assignments here and it will color coordinate those items that have been assigned. So you can actually export this to Excel and have it in a more handy position if you feel so inclined. Also up here, you'll note this little bell. So when you create your account, it asks you how often you want to receive notifications from the system. And so most of the options are weekly, or you can do it daily, and you can choose time of day. So if you want it in the morning or the evening, then it will send you notifications once a day. As we are out doing field work or interim, we ask that you change this to escalated. That way it will send you a notification every 10 minutes if we have made changes. So it's not like it's going to send you a notification in 10 minutes just saying nothing's changed. It's just going to send notifications of items changed. You can choose to hide the summary up there if you like that view better. That is what this button does. And then over here, you'll have the engagement timeline. And so if we have asked for additional items or left comments or rejected items, when you log in, there will be a number here, and it will show changes that we have made since you were last in the program. And so it might have a number here saying 1 or 2 or whatever it may be. And as you expand that, it will list out exactly what we changed. And so here, these were just all of the items that Nicole has changed, but the new items will be highlighted. They will stand out. So you'll be able to tell the old items versus the new items and kind of what has changed. Beyond that, I don't know that there's a whole lot else that I can tell you about the program until you start using it. You're not really going to know what you don't know, right? So down here, if you need additional information and your auditor is unavailable and you can't find me, then you can go to tutorials and you can download a tutorial in PDF, or you can watch the various training programs that are also provided. So you do have that option if you need additional information on how to do something. Last, we have Revio. So Revio is a program that we are going to use to disseminate the final reports securely. In previous years, we would email them to you, but a lot of them were too large to be emailed and kind of caused some issues there. So Revio is going to be a program that is available at www.revio.com. And when you go to the website, it'll send you a link once we actually go and upload your final product to the website. It'll send you a link to create an account, and you'll go in and you can download the final product that we have finalized for you. And then we'll obviously process the paper copies that you want as well. So that is how the final reports will be released. And that is all that I have. Thank you very much for listening. And do you have any questions? If you do, you can use the chat box or the question box. All right.
Well, thank you, Jessica. There's a lot of new tools that we'll be using, and I hope that these are helpful to expedite the whole process, make it easier for us to share information back and forth. So definitely looking forward to implementing those new tools. So next, I'd like to introduce to you Jeremy Dillard. Jeremy is the firm's quality control partner. So him and his team basically are the ones who make sure that we are applying all professional standards appropriately, and they kind of keep a pulse on everything that we're doing. They're kind of like the auditor's auditor. So they're looking over our shoulder, making sure we're doing everything that we should be doing. And I've invited him today to talk a little bit about internal controls. So at this point in time, I will turn it over to Jeremy, and thank you very much.
Thank you, Brad. Can you do me a favor? Raise your hand if you can hear me. I want to make sure the microphone's working. Can you hear me? Sweet. All right, we got at least one thing going right so far. Thank you very much, everyone, for joining today. I'm going to be covering internal control and basically some changes caused by COVID, so that as you're going through trying to evaluate all the things that are going on with COVID, this doesn't get overlooked in simple terms. First up, just so you know about me, been in public accounting going on almost 25 years now. I am the technical partner for SingerLewak. I'm based in California. I've been doing a lot of work in the profession. As you can see on the screen, I'm currently one of the members of the Private Company Council that advises the FASB on how to modify GAAP. I've also sat on the AICPA Council and was on one of their senior technical committees, and actually coincidentally authored the AICPA practice aid on how to apply internal controls to a variety of environments. So this kind of dovetails really well with kind of what I can bring to the table. So as far as what I'm going to talk about for the next half hour, I'm going to give you kind of a background on COSO and the framework that governs, really sets the standard for internal controls. And then we're going to do a deep dive into the key areas that are being impacted because of COVID-19. So with COSO, let's get into it. I want to level set things just so some of you may be CPAs, some of you may not, but for those of you that are, you probably heard the term COSO back when you're studying for the CPA exam and then immediately forgot about it. Because this is one of those areas that just no one really wants to know a lot about, and I can totally understand that. Just as a way of putting some background on it though, it's been around for a long time. It started initially in the 70s and then ultimately was rolled out in the early 90s as a framework on how to design a system of internal control. And this is industry agnostic. This applies to businesses, not-for-profits, governmental entities. All these fundamental concepts that laid out in the COSO framework are applicable. And it basically helps, COSO framework helps entities assess their system of internal control. And it's used by not only just management and those working within the entity, but also for board members or those charged with governance, as well as even external stakeholders. And COSO is not very prescriptive. It sets some high-level principles, and I'll cover that in a minute. It was refreshed in 2013 because just business changes. I think all of us remember the days when maybe an entity had a payroll department, and now I can really count on my hand the number of clients that I still know that have a payroll department. Almost everyone's outsourced it. As well as the use of technology. Maybe when in the early 90s and in the 80s, there was a lot more paper floating around in office space, and now it's almost all become digitized. So these are some examples where COSO needed to be refreshed, and that's what they did in 2013. This is the lovely COSO cube that probably a lot of you may have seen throughout your careers, and this is how it was updated in 2013. Not a lot you need to take away from this slide other than just understand that top surface where it says operations, reporting, compliance. Those are those main areas that COSO applies to. So it's not just a GAAP issue. It's not just compliance. It covers everything about an organization and the main areas that you can see those components of internal control on the front, between control environment all the way down to monitoring activities. That's where it kind of breaks it down. And you can see on the right side, it applies not at that whole organization level, but it might get into a department level as well. The way that when they refreshed it in 2013, they provided a structure to it. So before, if you had to look up COSO and read it, you would need a pot of coffee, and you would really have to try hard to stay awake because it was this narrative document that was about 100+ pages that was really, really dull. When they refreshed it in 2013, one of the things they did is try to just reorganize the whole structure of the way the internal control framework works. Those 3 objectives that you saw, that's the compliance, operations, and reporting. Then it would break down into those 5 components like control environment, control activities, monitoring activities, risk assessment. And then within those, this is the part that was new, is the principles and the points of focus. The principles are those fundamental concepts that are needed to understand those internal control requirements and to assist with designing and implementing those control activities. And the points of focus are just simply important characteristics of those principles. So the reason why I have this slide here is to understand when we're performing an audit of financial information and we decide or we identify an area where there's a deficiency, in a lot of ways it dovetails to this framework where we can see there's a gap and a breakdown. Like I talked about within components on that cube, the front side of it, these are those 5 components. These existed all along since the early 90s. Just a level set on what these stand for. Your control environment, that's everyone usually thinks of that about the tone at the top, right? From the governance standpoint and cascading through the organization, what's kind of the attitude they set about the importance of internal control? You have some organizations I've seen that kind of fly by the seat of their pants, and internal controls goes by the wayside in favor of just making money. I see others where they say, we're going to make money, but we're not going to cut corners. We're going to make sure that we follow this, and we're going to operate with appropriate integrity and business ethics. So that's all wrapped up within the control environment. Risk assessment is the area that you probably hear about within your audits. This is where the audit team focuses. And I would say with some organizations, it is a formalized process where maybe management meets on a monthly basis to talk about whatever operations is going on, but a standing agenda item is, hey, is there anything new that's happened where it's going to cause problems? Do we need to talk about any problems that already did occur? That's all wrapped up into risk assessment. It can happen on a formalized basis, on an ad hoc basis, but the fundamental concept is your goals are right there within it. We want to make money. We want to have reliable financial reporting. And your risk assessment is going through and saying, okay, from a brainstorming perspective, what are all the things that could happen that could prevent us from achieving those goals? For example, staying in compliance. What are all the things that could go wrong? And then from those, let's start analyzing them as far as which are the ones that are likely to occur, which are the ones that will have a small impact versus a catastrophic impact to the organization. That's all wrapped up in the risk assessment. Control activities, this is where most of us spend our day-to-day operations, is these are those policies and procedures that are, the control activities are what's designed to mitigate those risks that you've identified in your risk assessment. It's fairly straightforward. This is where you see most of the time the auditors find if there's a deficiency, it's somewhere usually within the control activities. For example, maybe there's not when journal entries are posted, maybe there's not someone who reviews them. That's an example of a control activity. And control activities includes both manual as well as automated controls. It includes technology controls as well. And I'll talk about that a little later. Information communication. This is, again, just focusing on what's the quality of data and information that flows within the organization as well as flows to external stakeholders. And trying to understand, okay, do we have the right controls over making sure that accurate, reliable information is flowing back and forth? And monitoring activities is simply, think of it as kind of your checkup. These are basically oversight to make sure that the control activities and everything else, the risk assessment, it's all happening as it should. These can be done on an ongoing basis. They can be done on a periodic basis once a year. That's all part, and it's very similar to control activities, but these are the higher level ones that are just making sure the control activities are actually happening and they're effective at achieving whatever their desired goal is in mitigating a risk. So now that we kind of level set as far as where COSOS comes into play, let's talk about where it's going to change as it relates to COVID. So keep in mind, it's forced a lot of companies and a lot of governmental entities to go through and identify new risks that maybe didn't exist before. I think all of us are seeing a lot of news now about hacking because we've become such computer-based operations going forward. Whenever we've got risks, then you have to go through and identify what's going to be your planned response to that. Sometimes you may get, you know what, the risk is just, it's tedious, it's immaterial, we're not even going to have a planned response. Or maybe the planned response is, you know what, we've got insurance coverage that'll take care of this. Or maybe you have to implement new controls, and that gets into the third bullet point here. And lastly, you have to then think about, okay, well, as I go through COVID and there's a lot of new issues that might be popping up that maybe we haven't dealt with before, we don't have control activities that might cover them. A lot of times, for example, I see that in a financial accounting way with, say, impairment issues. Then do I have good internal controls over financial reporting, or ICFR? And do I need to monitor these things as everything's changing? Keep in mind, while everyone's going through all this, they're doing it while they're all working remote, which makes it adds another level of difficulty or challenge to everything going on. So some of the key areas to think about as far as changes caused by COVID as it relates to the COSO framework, first is going to be changes on your control environment. It's easy to have a good tone at the top when everyone's going into the same office. Those that are leading the organization are there on a daily basis. They're walking through the halls. They're demonstrating ethical behavior, but it's a completely different ballgame when everyone's working remote. And how do you demonstrate those types of attitudes and perspectives and those expectations for how the organization should operate if no one's around you? Do you start thinking about, well, do I need to push out communications? What do I need to do, if anything, to go through and start trying to understand what needs to change? As well as your risk assessment. I think all of us are probably can understand that the risks to an organization, again, whether it's operations, reporting, or compliance, those risks have shifted a little. So that means that your risk assessment probably needs to be revisited. There may be new risks that have arisen because of COVID. And that gets into the bottom bullet point. There could be new control activities that need to be designed, or maybe existing control activities need to be augmented to address those newer elevated risks that are caused by COVID. An example is materiality. So what may have been material before may not be as material, or maybe there's new issues that need to come into play. Well, again, if you're changing what you view as material, or what the users or stakeholders might view as material, that could fundamentally impact your controls, right? Because you're going to design controls that based on where items are viewed as being material. And if you're saying, well, materiality changed, then you need to revisit, do some of my controls need to change? Again, relevance and reliability of information. It's one thing if all of the information we receive is being done in a paper format and we're right there, we could talk to people, but what happens when it goes to a virtual environment where we're working remotely and everything is digitized? Do we need to have new controls? And again, when you get into monitoring, it's one thing to have an organization's all for the most part have monitoring controls. But if your monitoring controls can't be performed in the same manner that they were previously, then again, you need to think about, well, do I need to shift how I do my monitoring activities? So let's break this down a little bit more, because that's kind of at a high level what's going on. So again, remember I talked about how they restructured COSO and they added these principles. Now, I'm not going to get into points of focus. That'll put everyone to sleep. But as far as principles, I might keep you awake. All right, so when you get into the control environment, there was, I think, 5 principles that related to control environment. First one was an entity demonstrates a commitment to integrity and ethical values. Again, this is what I was talking about with that tone at the top. And well, what do you do if everyone's working remote? How do you demonstrate that? Do you have department meetings that are held via Teams where that becomes something you're going to reemphasize at each meeting? Is there internal communications that are coming out from leadership of the organization that says, here's what's going on, here's how we're demonstrating, these are our priorities, or it's important to us that we maintain this quality of work, or so on. Some things to think about. When you have financial hardships with employees that are caused by COVID, how is management going to respond to those risks? Again, this relates right to, it's both risk assessment, but in this instance, it's control environment. How's management, they're acknowledging that there's financial hardships. What are they doing about it? That'll set the control, that'll help the control environment. Again, reporting lines. Well, if you shift, and I've seen this quite common with a lot of entities, is as there's been turnover and some cases layoffs, but just people's roles shift within the organization due to COVID, and now reporting lines are changing. Do you now need to go back and revisit that from a control environment perspective? You have remote employees who now have reporting lines where they're reporting to people they've never met with before. If you don't think about how that can impact your control environment, setting the tone, then that becomes a little bit of a gap that may need to be addressed. Principle 3, management establishes structures, reporting lines, appropriate authorities, and responsibilities in the pursuit of objectives. Again, you're setting up the organization structure in a way that you can achieve your organization's objectives, its goals. Again, whether it's operations, reporting, or compliance. So again, with reporting lines and structure that may be shifting, may becoming a lot more flat and virtual, how do you basically go through and realign those reporting lines and responsibilities so you can achieve those objectives? Like you see in the bottom bullet point, employees that may be performing control activities that were not previously responsible for, they may have different levels of authority and new reporting lines. You got to think about that. Some points to consider is, first of all, go through and identify what those changes are. That's going to be step 1. If you've gone through and you've shifted roles within the organization because of COVID and people working remote, well, then your organization structure's changed. Let's just start out with identifying those. That'll help you then determine what's the appropriate next course of action. Maybe you realize that the change is really insignificant, but conversely, what if it's a significant change and now we need to go back and maybe have some department meetings and things like that, so we kind of reset how the organization works and how everyone understands the organization is operating now under the new structure. Like you see in the bottom bullet point, in light of the environment, management might consider implementing temporary mechanism for monitoring those. So if you are viewing COVID and the remote work environment as a temporary operating structure, so that you've had to give people, say, IT access to systems that previously they didn't need remote access to, well, you want to think that through and understand, do I need to have proper oversight of those to make sure that it's only on a temporary basis, and to revisit that periodically to make sure that assignment of roles, responsibilities, authorities is appropriate and at any given time later when those change. So next up, the second component of internal control is risk assessment. So again, principle 6 here, entity specifies objectives with sufficient clarity to enable the identification and assessment of risk. So again, objectives are, we want to operate appropriately, we want to have reliable, accurate reporting, and we want to have also stay in compliance with laws. So COVID has been such a fundamental shift. You could think about how that impacts materiality, and then how that cascades into the assertions at various account levels. And maybe you have new risks, risk assessments that you've done based on account balances changing and materiality changing. So again, this is an area where risk assessment needs to be visited, because if an account that historically was immaterial, and maybe the organization had few internal control activities developed related to that because it was understandably immaterial, but now it is material for a variety of reasons. You may need to go back and revisit that risk assessment on, okay, well, if it's now material, what happens if it's materially wrong? Do I need to go, is that okay? Or do I need to consider adding some internal control activities that could help mitigate that from being materially wrong? And think about that, how that impacts your internal control over financial reporting. That could, if you're saying materiality changes, that I can say from the auditor standpoint, if materiality changes, that means how we view every account balance within the financial statements, every line item, I should say, within the financial statements fundamentally gets reassessed on the audit procedures and the work we do. So I would be expecting from the client side, from the entity side, though, if the organization reassesses materiality based on COVID and says, well, now it's a different amount, then they probably need to take a holistic look at all of the control activities and revisit, are they appropriate still? Principle 8, entity considers fraud. Well, I think this one is pretty much a no-brainer for a lot of us. With everything going on and some individuals having financial hardship, there's going to be new fraud risk factors, and those are going to be presented in a variety of ways. Again, that fraud risk triangle that maybe you're familiar with, where you have opportunity, added, incentive, and rationalization as kind of the 3 pillars to committing fraud. You don't need all 3, but generally you find whenever the fraud has occurred, all 3 of those things are happening. So when you start thinking about these with pressures, okay, well, depending on the organization and how management's compensated and what their incentives are, there could be increased pressure to have fraudulent financial reporting. And you just need to acknowledge it and then think about, okay, well, do we need to, is it a risk, a new fraud risk, or an elevated fraud risk because of COVID that we need to go through and figure out how to handle this? Again, like I talked about, employees that could be having financial hardships because of everything going on with COVID. And that creates increased pressure, incentive, and motivation to commit fraud. So you want to be thinking about that. Where you, as much as you might think about employees are always honest and you have great people working with you, you still got to consider the likelihood of this happening. And because of COVID, I think all of us have seen in the news, there's increased financial hardship for a lot of people. And then think also about opportunities to commit fraud. If the work is all being done remote, then does that create new opportunities? It's one thing if we're seeing each other on a daily basis. Think about it when, I'll use an example if you're doing a diet. It's one thing if you're seeing your trainer or whoever you're accountable to on a daily basis and telling them, yep, I'm eating right. It's another thing if you've never seen them because it's now a virtual environment in COVID and you've got an empty box of Snickers bars next to you, but you're still telling that person, yep, I'm eating right, but you never have to see them. The kind of accountability isn't there. The opportunities are increased to commit fraud. So that's an area to consider with a remote work environment is, are there new opportunities or new risks that are created, new fraud risks that are created because of COVID and people working remote? Principle 9, you identify changes that impact internal control. So I don't know a single entity that is still operating now in a same manner that they operated pre-COVID. Whether it's your board meetings or your, I'll say your leadership meetings are now being held virtually instead of touching base with people on from a management perspective. Managing people and seeing them face to face on a daily basis is now being done virtually, maybe only once a week instead of daily. These are all changes in how operation is being conducted in a COVID environment and working remote. So you want to be thinking about that and understanding, okay, well, just fundamentally, are there new risks that are created? And again, risk could be operations, reporting, compliance, any one of those three areas. So you want to be thinking about that and understanding, are there things that need to be reconsidered because they've just changed in how the organization functions fundamentally because of COVID and the remote workforce. Principle 10, entity selects and develops control activities to contribute to the mitigation of risk to achieving goals and acceptable levels. Again, I told you, I'm trying to keep you awake here, and this content is dry. So I'm trying to provide a lot of content here that'll hopefully is practical and is reality based rather than just keeping it in the theoretical world. So from a control activities perspective, think about how all these new risks need to be assessed, I should say, on whether new controls or existing controls need to be changed. And if so, is that going to be a challenge to try and develop new controls or modify existing controls, as well as not only just to then put them into place and then put those controls in operation, but then think about monitoring them after the fact, making sure they're actually being embraced and being used as designed and intended. So that's an area you want to consider as you're going through and analyzing the impact of control activities in a remote workforce. Again, there's two types of control activities you have. You have the preventive controls and the detective controls. Easy example on preventive control is you logged into your computer this morning, you probably entered a password. If you entered the wrong password, it kicks you out. That's a preventive control. Detective control is you can put in any password you want, it still lets you onto the laptop that you're using or the computer you're using. And detective control is your IT department comes in, gets you and says, how'd you get access without entering a password or entering a wrong password? Well, in a COVID environment where everything's being done virtually with remote workforce, or a lot of it, I'll say, you want to be thinking about what are types of controls. If you're going to be implementing new controls, what kinds do you want to implement? Honestly, you're probably going to be looking at more detective controls, things happening after the fact and trying to identify if something was done wrong. And that's fundamentally just because you're dealing with a remote work environment. It's a lot harder to prevent things up front when they're not around you, with the people you're working with, the documents you're dealing with, the information. If it's not all around you, it's harder to have a preventive control in a lot of cases. Additionally, just for any service organizations you're using, think of a payroll processing entity. Maybe an IT department is another common one. But any outsourced service organizations, if it's significant to you, to your entity that you work at, then you're going to want to also understand any changes to their system of internal control, because that's all going to flow down to you. So if I'm working with an entity that has, I'll just say ADP is the payroll processing entity, and payroll is significant to my client, then I already, as an auditor, need to understand how the controls work at ADP, and that's where probably the SOC reports that you're familiar with, those come into play, and looking at those complementary user entity controls. Well, if they're changing how they do their work, I would want to look at that list of those complementary user entity controls to see what they expect needs to happen under their new system of internal control at ADP. What needs to happen at my client, at that entity, because it all works together. So again, an area you want to be aware of. As far as Principle 11, IT controls. If you are changing and rolling out new systems, think of it if you have new internal servers, new portals you're using for document storage or collaboration. Well, if you have new IT systems, well, then there's opportunity things can go wrong. So you just want to do a risk assessment, evaluate what's the likelihood that it can go wrong, how could it go wrong, and then start trying to, based on the assessment of those risks related to IT controls, start thinking about if there's new or augmented IT controls that need to be designed or implemented to support this. Again, I think a lot of times we all are so busy with our daily responsibilities that we forget to think about, oh, we rolled out a new system. I got to think it all the way through. What could go wrong here? And what do I need to change? Or what policies or procedures do I need to enact so that it all goes smoothly and I've mitigated the risk that things go badly? All right. Again, consideration, like I put here in the green, need to be given a system access. I think with people working remote right now, a lot of people have access to a lot of systems, and that may be perfectly appropriate in the current environment where people are working remote. You just probably want to stay on top of that, make sure that you are using best practices for your remote IT access for all those users, and consider also as they start to come back into the office, right? Hopefully over the summer, we're all going to start going back into the workplace more. Then do we need to revisit those controls? If I have someone who received basically remote access, whether it's VPN or whatnot, to do their work from home during COVID, and now instead what's happening is they're going back into the office 4 days a week or 5 days a week, well, they don't need that remote access anymore. That's just creating a risk that something can go wrong. So let's just strip that away. Again, the concept here is revisit this as your IT controls change and make sure you're staying ahead of the problems instead of finding out about them later. So with Principle 13, information and communication, again, the concept here is you have quality information that's flowing within the organization as well as with external. So think about it from a high level standpoint, quality information supporting the function of internal control. So we've all dealt with this. We just maybe hadn't thought about this component of the COSO framework with COVID and having office closures and trying to forward that news to all the employees working within the organization, as well as what are your new policies about how to perform work while you're doing it remote. All of that is information. And again, the concept here is how do you have control over that information so the right information is getting to the right people. That's what we're getting at here that you want to think through. And it may be as simple as you do department Teams meetings or Zoom meetings, or maybe it's a daily email or a weekly email that goes out from the organization leader. These are all things that can be done, but the concept is you want to think about what's the right way to communicate the right information. Again, same thing with Principle 14. This focuses more importantly on internal communication. Think about as work gets done and changes, and how it's done changes under COVID, you need to consider if the information is still effective, right? Are we still getting the right information out? And if the information is sensitive information, maybe it's not appropriate to send that in a regular email, or maybe it needs to be an encrypted email, or maybe because information is confidential based on its nature, we need to be using VPN, a virtual private network, or other types of IT technologies. These are what's all rolled up in Principle 14. Principle 15 is very similar. It just focuses, instead of internal communications, it's focused on external communications. Do we need a secure portal now? If before I used to deliver things in hard copy and printed out paper copies to external stakeholders, think of financial information, right? Well, if I used to be able to deliver that by hand and go, here's a bound copy of this information, and now I have to do it digitally, well, let's think through what's the right way to get the right information to the right people. Do I need to be using VPN to do that? Do I need to use password protected files to ensure that it's the right way is getting there? Like Jessica just talked about, do I need to use Rivio or other types of portals that are secure in order to provide this information? So all of these things need to be thought through. It's just not the work is done the same as it was pre-COVID. You want to be revisiting these things as the environment changes on how information is passed back and forth. All right, now we're on to monitoring activities. We're getting to the end of this train here. So Principle 16, entity selects, develops, performs ongoing and/or separate evaluations to ascertain. Again, as internal control changes, you need to assess if there's changes in your monitoring activities is needed. That's the fundamental concept. So it may be your way of ensuring that people were following the policies and procedures was to walk around the office, maybe grab randomly some the paperwork and double check that it had all the required approvals, whatever it may be. But if no one's in the office anymore, then maybe that type of monitoring activity is no longer effective, and something needs to be changed or developed from scratch to address how the organization is performing its controls in a virtual environment. It can be a challenge, but these are all areas that you want to be thinking about. And again, this is more of what I was just covering in that slide. At this point, I'll open it up for any questions. I don't see any in the Q&A or chat.
Jeremy, I have a question for you.
Oh, no.
Oh, so a lot of our clients, I think, really have struggled in the past with that last component of the internal controls, the monitoring function. You know, traditionally, we think of that as the internal audit function. And many of our clients are smaller in size, and so they don't necessarily have the resources to have a formal monitoring function. But I was just wondering if you could maybe give some suggestions for how they could begin to implement a monitoring function, maybe even on an informal basis, but something that, you know, as auditors, we can come and see, oh yeah, they are doing some sort of monitoring of the internal control system.
Okay, so recapping what I was talking about monitoring, you have two types of monitoring activities. You have ongoing, and then you have kind of standalone or periodic activities. So I would be looking at what are the monitoring activities as it relates to technology. Those are the ongoing ones. You know, someone enters the wrong password several times, where it'll use the automated features within your systems to notify you. I would be leveraging the technology wherever possible to have those ongoing monitoring activities. Then from there, the other ones, those would be kind of your periodic monitoring activities, where maybe once a quarter, or on an annual basis, depending on the severity of the control, or the significance, maybe is a better way to say it, of the control activity, will determine the frequency of how often you go double check that it's being done. So if I don't have clients with an internal audit function, which honestly is most of my clients, then a lot of cases, what you'll see is that monitoring activity is being pushed up to that kind of senior level, whether it's the board members or the C-suite. It's those individuals that on a periodic basis, say a monthly basis, are going through it and looking at internal reports, whether it's financial information or whatever it happens to be. And that's the activities they're using for monitoring. So it really varies, but that's what I recommend. If it's a manual type of activity, monitoring activity, probably monthly, quarterly, or annual, depending on the risk that's being addressed by those activities. If it's where possible and the systems allow it, I would be using the ongoing activities for IT related purposes.
Okay, thanks, Jeremy, for that additional information. And the other thing maybe you could talk about just for a minute or two is you mentioned, you know, that the clients need to be considering materiality. How would you suggest they go about, you know, making those kinds of determinations? What things should they be focusing on, and which things maybe they don't need to focus on quite as much?
Well, let's start with the basics of what materiality is. That is basic. That's going to be any area where a change or an error would impact the decisions made by a user of the information, right? So that's what materiality is, just to make sure we're on the same page. So I think we're all in an environment or understand that the world's changing fundamentally in some ways, whether it because of COVID or everything else that's in the news, that what people consider important could be changing. Areas that maybe were not viewed as that significant or that important now are viewed with a higher level of importance. So that then drives, if you think about what do your stakeholders view as important and that has shifted, then you need to be considering how that impacts your materiality. I mean, an area that's in the news now, I'll just say, is when you hear about budget cuts, in particular law enforcement. And I'm not getting political here. It's just saying, but people are viewing that now. It's a sensitive topic. So you want to be, that's now an area where maybe you consider materiality is different than it was pre-COVID for this area. So you might be thinking about, I need to view this under a little bit finer microscope than I did before. Well, if you realize the stakeholders care more about this area, now you got to think about, do I have proper controls to make sure that I'm getting this I have more confidence that it's correct and reliable than maybe I had before. Maybe before it was fine for before, but now everyone is placing an increased level of importance on it. So I need to then think through, well, I got to have an increased level of effort to make sure that I'm getting this right.
Okay, well, thank you, Jeremy.
Sure.
So we don't have any other questions from the audience. I'm wondering, our next presenter is Bob Green. I don't see him on quite yet. I don't know, Lynn, are you in a position to speak on behalf of Bob?
Brad, he should be joining any minute, and unfortunately, he has the presentation. I apologize for the delay.
That's okay. I think, did he just join on? Bob, are you there? No, that wasn't Bob joining. Okay. Well, why don't we take maybe a 5-minute stretch break to give Bob a chance to join us. Bob will be kind of supplementing the information that Jeremy just told us about, but Bob's coming at more from the viewpoint of technology and things that need to be in place to ensure that things are being accounted for and happening as they're supposed to. So anyway, so let's take 5 minutes real quick, and we'll be back at 11:05. Thanks. Hi, Bob. We're taking a quick break. Everybody should be back at 11:05, so got a couple minutes to go.
Very good. Good to see you guys. How are you doing, Brett?
Good. How are you today?
I'm good. Thank you for having me do this. And Lynn's on too, right? Just to confirm.
Yes.
Awesome. Thank you. How's it going so far?
Doing well, I think, you know.
Good. Good.
So yeah, looking forward to your session here.
All right. I'll go on quiet mode and be ready to go. And Nathan, thank you for everything you're doing to coordinate.
Okay, everybody, welcome back. It's 11:05, and I would now like to welcome Bob Green with SingerLewak, and he's going to be giving us some more information on internal controls from some technology type of issues that you need to be thinking about. So I'll look forward to Bob's presentation here. Thank you.
Very good. Thank you very much, Brad. Very much appreciate it. Confirming everybody can at least see me. I'm going to be putting up the screen now. Give me just a moment, please. And Brad, in your mode, can you see the screen okay that I just shared? It should be the, very good. Okay. So good morning, everybody. Wanted to say we appreciate being here today. I know we've got about 30 minutes. We're going to go over some things today regarding system strategies, kind of for the remote workforce concept. And I'm going to get started right away. The first question, though, I had, this is really more for asking some of the participants, if we could find out, and Nathan, maybe you could help us a little bit. I'd like to get a quick feel for people's titles. Like, are people overseeing IT? And this would be something I'd like to find out. So Brad, I know you've been helping kind of coordinate this morning. Kind of curious how many people have IT responsibility. Be interested to see some feedback in some chat if that's possible, or just forward us the chat. That would be something we could learn as we're about to do some introductions. It's not going to slow us down. I just want to get a feel for people's comfort and have they been overseeing IT in the past. So let's continue. Just a moment.
Bob, it looks like by a show of hands, we've got a few people that are raising their hands saying they are responsible for IT.
Outstanding. Thank you, Lynn. Okay, so I'm going to introduce Lynn in a moment as well. Let's get started. Hold on. Okay, today's agenda. We're going to go through a quick introduction. We're also going to share a little bit more about what it is that our team at SingerLewak does, which is relevant to what you're going to hear about today, and really get more into the meat of it, which is the recommendations for some remote workforce system activities that go on in a lot of the organizations I'm sure that you're in. Certainly our firm and others and most of our clients are having an extensive amount of work being done remotely. And so this is the area that we're going to talk about today from more of a information security, information management standpoint. And what we're going to do is get through this hopefully quickly enough that we can get through some questions with you. So we'll be going through some moderated questions, and please feel free to store those up during the process, and we'll happily jump on those. So without further ado, I want to just quickly introduce myself, but more importantly, my colleague Lynn. I'm the partner here at SingerLewak responsible for IT consulting as well as IT assurance, assurance being more on the auditing side of IT. So a lot of today's conversation is about IT governance, meaning leadership around IT and how that's being managed by people like yourselves. But also, we do SOC audits and things and other sorts of auditing around IT controls. So we're very comfortable in that area, but we're also a full service IT advisory firm, which I'll show you in a minute, a little bit more about what we do. My background is I'm a former CFO and a Big Four auditor, but I've been in the IT advisory space as well as the IT auditing space for the last 25 years. Also, I get very active on a number of different organizations nationally, both as a speaker and author and also committee member and leader on digital transformation topics, IT best practices, IT governance, ERP applications, and other sorts of business software. So that's the short version of me. I'm actually headquartered in our California-based offices and would like to hopefully have a chance to meet some of you one day. Next would be Lynn McIntyre. Lynn is a director here in our group, SingerLewak Business Informatics. Lynn, do you want to share a brief bit about your bio so I don't have to speak for you?
Absolutely.
Thank you.
So I'm responsible here at SingerLewak for all of the assurance or IT assurance type work that we do. So that could be related to IT systems audits, service organization controls, or SOC. Used to be called SAS 70s back in the day, if that's a more familiar term to you. So those audits that we do for those, Sarbanes-Oxley, et cetera. We also do a fair number of IT risk and strategic assessments and even do some interim CIO IT governance type work as well. My background is in IT, so I had a number of years in an IT as an IT professional, and then the last about 15 years in the consulting and assurance and audit world related around IT. So back to you, Bob.
Thank you. Just very blessed and fortunate to have Lynn on our team. We've worked together for a while now, and I know you've already had a chance to talk to a couple of various opportunities we've had up in the Oregon offices already. So we're really happy to have a chance to integrate. I'm going to move forward. Here we go. Hold on. Our service domains, this is more for reference so people understand a little bit more of our skill sets. Normally we take a little longer to walk through this because of the time element we're not going to, but basically we focus on these sorts of things. I don't necessarily need to read them, but as you can see, these are not just about, I would argue the nuts and bolts of IT. It certainly starts there, but it works its way all the way up to a very strategic approach to advancing technology in all of our clients. So we're thought of as essentially objective advisors here in this space, where we can provide advice and counsel, ongoing support, CIO and CTO outsource services and things where we're actually not selling anything other than thinking and our time, as opposed to trying to sell product. A lot of CPA firms do try and sell solutions and software. It's not what we're about. And we like to actually be the ones that stand out and provide a lot of leadership and thinking. So today you're getting a bit of a taste of that in the area around security and such for remote workforce. So feel free to ask questions. I've got the chat box going here. So if you have some things, Lynn and I can see that as we go. Okay, so the first thing we're going to do is just a level set at this point, just to get a little bit of context for you. What sort of things are in use today? What sort of computing applications and what sort of software and such is in use today that can be even used on a remote basis? And here's some, and I noticed in the chat someone's responsible for ERP. Welcome to the club. I've been there, I get it, and it can be good and bad. But municipal accounting, finance, and ERP are certainly applications that are used on a remote basis, almost, I wouldn't say exclusively, but almost all of them now are made to be operating in that mode no matter what. So there's some good things for you there. If you haven't migrated to a more cloud-based version, that can be a little challenging, but we can get to that in a minute. CRM applications, organizations, particularly of a commercial nature, utilize things like CRM to manage their contacts, their customers, their constituents, and what have you in their spaces. And those are often used remotely. As are expense management, things like Concur and other things. I assume some of the organizations here use those as well to track expenses for the employees and such, including things all the way from purchasing all the way through payables and getting it on an expense check. HR, very frequently done on a remote basis, including cloud, but also not cloud. And it's a big piece of the world over there in terms of remote computing. And then I think the last piece is really where so many of us live every day is in the Microsoft space with 365. Those are used by companies both in and off-prem. But in this case, the conversation today is going to be focused more about the off-prem or remote use. Lynn, anything to add before I jump on to the next slide?
Well, the one thing I would add is 365, when we're looking at that, if you are using it, it is for data storage and mostly email. And if you're not on 365, what we would still see in here is what is used is what are you using for an email platform? A lot of data and information gets exchanged with that. So it could be an external exchange server or something like that. So that we would include that in kind of what are the computing platforms that we're going to be thinking about as we make recommendations today.
Thank you, Lynn. Okay. And again, a level set just to confirm the orientation of what we're going to be talking about here. You know, what is actually in use? What are the devices being used, right? What are people actually using to do their remote computing? And we threw these all up together. You've got PCs that can apply to Macs as well, of course, but typically Windows. And when people are working with home devices or business devices at the home, I think we're seeing a much more serious migration to the Windows 10 environment. We're certainly encouraging clients not to utilize anything but the most current technology from Microsoft from the standpoint of operating systems like the Win 10. Macs are certainly a discussion on their own. We probably don't have time for that today, but people use them extensively as well in a number of different industries. Modems and routers, if you think about remote use, everybody generally has something that they got either from their carrier or not. Sometimes includes a firewall, sometimes it doesn't. So these are things that people are utilizing to connect to your business and exchange your data. Obviously, the wireless situations that they use, whether it's cellular or based on their own wireless plans at home, those are being utilized. Again, every one of these things brings some level of risk. Smartphones are being used. I think we all know that. It tends to have made things so much more democratized out there so that everybody can compute everywhere. But it's not always perfect, but they also bring with themselves a whole host of security and challenges as well. And last would be just peripherals in general, printers, other sorts of things that people utilize, and certainly a whole lot of increase in the use of lights and video equipment than we used to have, right? So anyway, Lynn, anything else on here before we jump?
Nope, I'm good.
Great, okay. So let's talk about the risks. That really was, I think, where a lot of us, particularly with what I understand this particular the group watching today is focused on. These are really risks of using personal devices for business purposes, and that applies to both people's own Macs and people's PCs. There's some nuance here, and we can get into it at another time, or if you have questions for follow-up, we have email addresses at the end we'll share with you. But the first one is PII, which is obviously information that is more related to personal data around things like name and combinations of credit card information and or social security and that sort of thing. I'm sure all of you know that. But this is one of the highest risks, if not the biggest risk of anything happening to compromise your organization from actually having someone abscond with or misuse any data that's used in a remote setting. So I think we probably all would agree with that. Document storage locally is another issue. Lynn, I know we covered this in a lot of situations over the last year with people saying, hey, what can we do differently? Do you want to share a little bit on this one?
Sure. One of the biggest challenges that I've been working with our clients with is once their users were working from home is how do they access data and where are they going to store it? And so one of the concerns, particularly we are highlighting here, if you're allowing your users to use personal devices to connect to your business systems, is are they storing those documents locally? Meaning, are they saving them to the hard drive or are they saving them on the phone? You think about if you're getting an email and you're looking at that on your phone and you have, it has an attachment. Well, if you click on that attachment, it actually has to download that file first. So now that file is stored on that person's cell phone. And what is the protocol behind making sure that that data is protected and removed when it's no longer needed?
Mm-hmm. Yeah, and I think this goes into the area too where, you know, if depending on the configuration of your email systems, opening up that Word doc or Excel sheet may seem innocuous, but it can easily be saved depending on your settings and your security access and your security configurations to the computer they use at home. And again, a lot of these computers in the circumstances we see now, they sit on the kitchen table and someone else has to use it at night and someone different uses it during the day. And you know, these are a risk right now, and you certainly don't want files to be just laid about anywhere. And I know that's never anyone's intention, but not a good idea, particularly as you're dealing with a lot of sensitive information.
Yeah, I would add one more thing to this, Bob, is that often in solving this problem and getting our users working is that we didn't think a lot about what it is that we're doing. So I've seen a lot of occasions where somebody is, oh, I need to share a document, so I'm creating a Dropbox account or a box or whatever flavor of remote storage that you're using, Google Drive, etc. And we don't really, it's kind of now we have to go back and clean up what it is that we allow just to get people to be able to work.
Mm-hmm. Absolutely. Yeah, these are things that probably a number of you have already been facing. One of the things that's often overlooked here is it's not so much that there's a risk of having antivirus and malware protection software. It's the fact that many people don't. In fact, most computers are not sold with it anyway. And there is some level of protection, certainly in Win 10 and that sort of thing. But not having that is certainly something that, particularly if it's not current and tuned to the current defenses required, that can present a problem as well. Another part of this is firewalls. Again, firewalls are intended to ensure that certain things, you know, essentially access points to your computing devices at home or elsewhere cannot be accessed and can't be penetrated from the outside based on a variety of different rules. It is very often the case that either the firewall is included in certain people's equipment at home, whether it's their computer itself on their operating system, or in the actual modem and or router software, is really not particularly strong, and it also may not be particularly current. So these are things, again, presenting risks of, you know, again, do you want to rely on individuals to manage their stuff and you have to be subject to the risks of their negligence, or even if it's unintended negligence, that puts your data at risk and your business at risk. Router and modem challenges, Lynn, we kind of covered this. Is there anything else you wanted to share on that one?
Well, the biggest challenge for your IT people on this, and you probably have already had to deal with it, has more to do with the internet speed and the capability of that, in which often what we're seeing is that the router that they might have gotten internet, years ago, and they've never replaced it because it works just fine for what little that they're using it for. But once they have to start doing more modern things, now it becomes a challenge there. So this is not so much a risk of loss of data or risk of theft. It's more of challenges in the person being productive.
Absolutely. And the last one here is really something, actually next to last, is encryption. Lynn, I could share that, but you're far better about encryption than me at both the device level and also certainly the computer level.
Right. Well, encryption is now a new thing that we've had to consider when people are working remotely, that we have, if we didn't already have that model working before. And so encryption is a method of protecting or securing data. And so there's a concept of the encryption of data at what we call term as data at rest. So that means as it's sitting on your file, not on your computer, not being accessed or anything. But if somebody was to access it, do they have a proper, code? And this is all done by the systems to access that. And then you also have encryption of data in transit. So that means when it's moving. So as you're talking, you're sending data or looking at a screen or an application, it's exchanging data between your computer and the source. And so is that path of data also encrypted? So when we were working in the office and we were connecting into the system, we're sitting behind the firewall, we're not as concerned, depending on the business, but we're not as concerned about encryption. But once we get out, we have less control over that path. And so what you want to be looking at is do I have sensitive data? Do I have critical data that should be encrypted when it's both at rest and in transit? So again, thinking of our risk of personal devices, we don't have any control over what that person did with their computer. Did they encrypt their hard drive? Do they have these protocols set up? And so this is one of the reasons to think about why using personal devices might be not a great decision going forward.
Yeah, I'll take it a step further. Thank you, Lynn. Something that came up years ago before it was so straightforward to encrypt any computer's hard drive was I somehow left my laptop on the airplane situation. Or oops, I left my work phone sitting in the car and someone broke my window, took the phone. Those situations without encryption become a much larger issue. It doesn't take much for anybody who has certain software used in forensic computing to take any of these devices, look at it, and pull all the data out. It's really not that hard. If it's encrypted, it becomes extensively hard. So the concept here would be your IT department, if possible, enforcing procedures, which is kind of what the next point is, lack of policy enforcement. If they can enforce that certain encryption occurs, then the risk and the panic that goes on with a lost device goes way down. So it'd be interesting to find out if through the chat or whatever you want to share with us, how many of your organizations have worked towards getting encryption done on the device level, such that hard drives are, essentially blocked from anybody being able to pick it up and just run a forensic scan. So that'd be interesting to know. Lynn, anything else before we jump ahead?
I think we're good.
Okay. So now we're going to get to the recommendations. Just do a quick time check. We'll move forward. Device management. Here's a few. Let's go for it. First would be we want to have you consider have your IT department control the PC. It's best to issue a configured, we call policy enriched PC, meaning your people have come up with prudent policies of how to do things, including things like we've described, encryption and firewall protection, that kind of thing. Serviced and actually maintained and managed by your organization. And don't allow personal computers on your network. Here at SingerLewak, we really don't. I mean, there's an ability to look at some of the Office 365 accounts from other devices, but they have to be registered through our IT department. And actually, they have the ability to wipe them completely clean if, in fact, there's any abuse. So the concept of providing a PC to people is really the best method. We also realize, though, to be candid, that not everybody can afford to do that. Not every organization can keep desktops or something at the office, plus issue stuff for their employees to use at home. So Lynn, you had shared a couple ideas while we were planning this about some budget considerations. Would you like to share that?
Yeah, absolutely. So if you're not able to issue a PC or, you know, we're thinking in this case a laptop, it can be a desktop, but either case, if we can't do that to every person who's going to be working remotely, then one of the things you want to look at if you're using personal computers is then use a program that allows them to connect using what we call remote desktop support. So there's a couple of different providers out there. There's probably a large number, but the more common ones that we see is one called Go to My PC. We've also seen TeamViewer. There's several others that are out there. But what these programs do is allow you to use your personal computer, and you can connect. It gets configured with an encrypted key to connect to the user's desktop in the office. And that's the only thing that they can get to. And when they're connecting to them, you can configure it such that I can see everything. When I'm connected, I can see everything that is on my desktop. So I can run all my applications, and it's running in the office. And all I did is think of it almost as a window and a method to control what I'm seeing from my personal device. I'm not allowed to copy any files down to my computer. Nothing exists on my computer. It's just that connection to that remote desktop. And I'm looking at it like I'm looking at my monitor in my office and in the keyboard. So those programs tend to be, they're quick, they're fast to set up, they're easy for your IT people to manage for that, but it will allow them to have access to their desktop without running into that danger. Do they have their personal computer set up properly, securely, and do I want to prevent them from being able to store any files locally?
Thank you, Lynn. So again, you know, just to regroup here, always best to issue a computer if you can and control it through your own IT practices and policies. And by the way, if you don't have those, we can help with those, of course. But the idea would be, let's make sure that they're given to the employee, used in a certain manner that makes complete sense to them, not to have to use their own devices and rely on their own ability to manage them. Lynn came up with a couple ideas, as she mentioned, and if you want to get the names of those sent to you, she can do that after the meeting as well. Moving into this is something we've kind of alluded to. This is more about mobile device management. People think of that all the time. I think those of you who can see the video here, you know, we all have phones. I can tell you that SingerLewak has put mobile device management software on all of our phones. I know, Brad, you have it. Everybody here has it. And what that means is basically that there's a little environment created, and I'm using terms that Lynn will probably get me at later, but they create a little environment in your device that allow the firm to essentially be able to control and manage what is fed to you and what is actually sent back, and it keeps it very secure and encrypted and such. But it allows things to kind of not go into your personal space on your phone, or in certain cases on your computer. So you can do the same thing for a PC at home. A little more complicated, but the concept is really allowing an IT department to centrally manage devices that are out in the marketplace and in the world that we all live in every day. You go to Costco, it's with you, it's managed. You go on vacation in Hawaii, it's managed. You go to your office, it's managed. It's all in here, right? But your firm actually has the ability, or your organization has the ability to touch it and utilize it, and make sure that you're given the access to the resources, but they can also take those away and make sure that if you have someone leave the company, for example, and you want to make sure they don't have your data, that can all be taken care of and wiped without you having to be concerned about it. Your IT department can turn it off essentially, and it cleans out what they have. So again, a longer topic, but again, this is high level today. Wanted to make sure that we provided that. And Lynn, just for sake of time, I know we've been given a couple extra minutes by Brad. Do you want to share anything on MDM?
I would say the beauty of the MDM solution is more in if the device is lost or stolen. And so MDM allows us, Bob used the term wipe. Don't be afraid of that. That doesn't mean I'm going to wipe the entire phone if you left and you have nothing. But what this does is allows that environment that's created that might have your organization's information on it. It allows you to delete that remotely. So if the phone's stolen, for example, your person just has to report back to IT, hey, my phone is missing, lost, stolen, I don't know where it is. And then the IT can go in and with the press of a button, delete that data as soon as that phone is turned on, or even if it's turned on, it would just delete it. So it's a way of protecting your information.
Thank you, Lynn. We're going to move into software-based controls that can be put into place. These should be pretty helpful, I think. They probably apply to almost everyone. So these are really when an organization like yours issues devices to the employees. So these will be a little bit more specific than necessarily letting the employee use their own laptop or their own desktop at home. So virtual private networks, we're not going to have time to define all of them, but essentially using a VPN software application to essentially create a secure tunnel between the device being used and your servers and your connected software at the company or elsewhere in the cloud is really a smart way to go. And it actually allows you to have the information transmitted to be subject to much less risk, particularly sensitive data between your remote user and the source of the computing. Next would be multi-factor authentication. This, I think we've all seen multiple times where essentially it's not just good enough to put in a password, but then a text is sent or something and you have to actually confirm by text or other certain means, or a phone call is made and you have to hit a button. These are the things that happen, and frankly, we recommend this almost exclusively, frankly, for network access. It's very smart to do. Again, your IT departments have probably already set that up. It can go a little bit hog wild though, so be careful. This is an interesting one, the IP address restrictions concept. Think of this, a lot of people use remote-based accounting and ERP systems. These are the ones that really kind of came out with this process first on the commercial side. The application controls that allow people to basically say, you know, when I work at home, for example, my IP address on my, AT&T network is usually kind of here. Either it's fixed or it's in a block or whatever it might be. People can find that out, right? Their IP addresses. The software applications can be told by the administrator of those software applications, hey, just make sure that when Bob logs in on his AT&T or whatever network he's on, if he's not in this IP block or this isn't his IP address, don't let him in. I don't care if he knows his password. I don't care if he's texted back his double-factor authentication. I'm going to go a step further and make sure that Bob's IP address where he's working is going to let him in the door. Okay, so consider that and find out if some of your applications might have that level of security. It's becoming much more commonplace. Next would be, again, software-based controls. Some of the simplest security measures are often the least implemented, which is just sloppy work around access controls to folders and drives. It's that simple. Essentially, whoever has the rights at the highest level in your organization to control who accesses what folders and what files in the main storage for the business, okay, should really be cautious about how they dole out who can access what and at what level. So these are actually schemas that take a bit of time to create and a bit of time to implement, but very much related to having nothing to do with just remote workforce. Good sound IT policy says, get these into place, have the right people accessing the information they need and nobody else. It's really, it doesn't need to be all open. The challenge that you'll find is unless you do put restrictions on who can access in what areas and what folders, and what groups and such, then essentially there's no controls there. Most of you probably know that at your level, so I'm going to continue. I know, Brad, we're kind of watching the clock here, so I've got a minute or so left. Encryption, we've talked about that. Again, these are things that can be done using software. Lynn mentioned that earlier, we covered that. And Lynn, I think you mentioned a concern about Microsoft 365. It may seem like it comes out of the box just fine, but there's some things that you had suggested.
Yeah, so 365 is a great program and advocated. I don't know how many in the municipal areas is actually using this, but if you are, one of the things you want to make sure of is it allows users to manage their ability to share. So this has to get into the data storage part, so OneDrive, Teams, and SharePoint. So if you're using any of those three, just know that it is very easy for users to share connection to files and data in those externally. Now that might be something that you want to have happen, but it will be something that you want to be aware of, that it's there. You have protocols set up to how you would manage it and control it. And if you have no reason to share anything externally, turn it off. Out of the box, it's on. So unless your IT people know to go look for it and turn it off, just know it's on and users are able to share.
Thank you, Lynn. We're going to wrap up on this slide. I'm going to pull these all up together for sake of discussion time. These are policies for remote personnel. Okay. There's a variety of different things you can implement to make sure that, although these aren't necessarily controls in themselves that are as deep as the actual activity and the action that people can do, it's good to always have a variety of different policies that people acknowledge and sign. So there's security training policies and security training capabilities for both internet security and email security, phishing and malware, that sort of thing. The security trainings are actually sometimes kind of entertaining. I don't know if you've had to go through it. Sometimes it's a little burdensome, but at the end of the day, there is a lot available out there. We can certainly guide you to some opportunities there as well. Very inexpensive to implement, by the way, and it's good to do. And frankly, your insurance carriers are probably going to be happier that you put your people through this and help you on premium relative to not having done it. Next would be policies specifically to these areas, which I think you can see a lot of you have seen acceptable use policies for how people use computing devices. Very extensive now, gotten very legal, very important to have regardless, but there's also security policies that should be in place. Again, Lynn actually helps our clients write those that are specific to the organization. We also have communication policies and things around PII and sensitive data, so that people understand what can and can't be saved and what can and can't be forwarded, despite whatever rules might exist in the systems. And there's acceptable devices as well. You know, people can and can't use certain kinds of phones and or computers, et cetera. So again, for sake of time, just recognize these are important to have people both acknowledge and understand. Access controls, we covered that a little bit before, and data storage, Lynn covered some of that as well. But it's important to have policies around local storage versus remote storage, what's shared, how things can be shared, and what controls are in place to actually make sure that happens. So that is our last slide of content. Thank you, Brad, for the extra couple minutes. I wanted to see if there was any quick Q&A in the chat, and if not, certainly here's our email addresses if you'd like to follow up. And of course, anyone on our Oregon team can find us here as well to get in touch with you for questions if you have them afterwards. So I want to thank you, Lynn. Thank you, Brad, for having us join you today. And if there's any questions you'd like us to follow up on, let us know.
There aren't any questions currently in chat or the question and answer period. So okay. Thank you, everyone. Again, if you have any questions or you want to, particularly on the policies, talk about what the content of one should be happy to answer any of those questions.
Great. Thank you, Lynn.
Thank you, Bob and Lynn, for presenting today. It's very informative and just things we got to think about. The data is becoming more and more sensitive all the time, and there's lots of people out there who are trying to access it inappropriately. So thank you very much, and appreciate you presenting today.
Yeah, thank you very much. Have a good rest of your day.
Thank you. Bye-bye.
Bye.
Okay, so our next session, I'm going to be talking kind of a reliving 2020. I'm sure everybody really wants to relive 2020. It's kind of actually a look back and a look forward, because in 2020, we had this thing called the Corona Relief Fund that many of us had to live with in one form or another in the last year. And just give you some idea of the scope of this thing. So Oregon as a state was allocated $1.64 billion. And of course, Portland, Multnomah County, Washington County, they got directly from the federal government $247 million between the three organizations. That was given to them directly under this. everybody else had to go through a state of Oregon system to access the remaining 1.39 billion. Of that, 200 million was slated to reimbursements to cities, counties, and special districts, with the remainder going to the state of Oregon itself and the tribes. And all that money had to be expended by December 30th, 2020. At least that's what we thought. Until on December 27th, President Trump signed into law the Consolidated Reconciliation Act, which actually extended that to December 30th, 2020. And one of the challenges we had, and this when I say we, I mean both us as auditors and you as clients, is we had, with the Corona Relief Fund, an ever-changing set of rules. You know, the CARES Act that funded the CRF, that was signed into law on March 27th, 2020. Immediately, you know, within less than a month, we got 4 pages of guidance and 1 page of FAQs. Those were updated in June 24th. Again, they were updated on June 30th. Again, in September 2020, we get more guidance. October, more guidance. November, and all the way until December 2020, we were continuing to get additional guidance on the use of these Corona relief funds. And I know most of you all have June 30 year ends. So you think about it, you've had these funds made available to you basically in the last fiscal year into June 30, 2020, trying to comply with the rules on this when they weren't even fully completed yet. So you're doing the best job you could. Then of course, as auditors, you know, we have a little bit benefit of some, you know, hindsight, because now we might be out there doing your audit in September, October, and maybe we have now additional guidance. But, you know, just having these ever-changing set of rules really created lots of issues related to how we are to be using these Corona relief funds. And you got to think about it, you know, they put this out in very, very broad terms. You know, it was necessary expenditures incurred due to COVID-19. I mean, that was it. I mean, they very broad. And, you know, they kept trying to narrow things down in the guidance to help us understand exactly what that means. Also, you know, these funds, you know, had to be for things that were not accounted for in your current budget. And of course, you know, we had this time period constraint of beginning on March 1 and ending on December 30th, 2020 initially. So, you know, we had kind of vague guidance, not a lot of guidance, and we had to do this in a very short time period. So it was interesting if we started looking at some of these things, but even at the very beginning, in that April 22nd, 2020 FAQs, one of the questions was asked, what records must be kept by governments that are receiving these payments? And essentially the answer is they should be sufficient to demonstrate that they've been used in compliance with Section 601D of the Social Security Act, which is basically the implementing act for the CARES Fund and the Corona Relief Fund. So it was important to keep sufficient records. And as auditors, you know, we struggled sometimes with what was being kept for those records. It was interesting, as I said, 1.39 million went to the state of Oregon, and the state of Oregon was responsible for basically doling out those funds. And the Department of Administrative Services early on became kind of concerned because they were getting all kinds of requests, and they weren't sure whether or not they were being properly handled at the local government. So the Department of Administrative Services, they engaged the Oregon Secretary of State's Audits Division to go out and conduct a review of the reimbursements being requested by local governments. So in the first round of requests, they looked at 34 different governmental entities and their reimbursement requests. So I thought I'd spend a little bit of time just going over some of the things that the Audits Division found in those reimbursement requests. So first thing that they noted is there was a wide disparity in how much money people were asking for. They looked at in terms of, just size, and they found, one city, was requesting as much in payroll costs as cities five or six times its size. And they asked, now hold it, does that make just logical sense? How is it that this smaller city is asking, for payroll reimbursements as much as, something that's much, much larger? Likewise, it goes, both ways. Sometimes the entities are requesting substantially less than similar sized organizations. So they immediately identified, hey, there's some disparity going on here. There could be things that we need to be examined closer. One of the findings they found was, of 22 of the 34 entities looked at, they found that they had very clear and adequate documentation to support their reimbursements. And they found some very good examples of that. But 22 out of 34, that means that 12 of them, there was documentation issues. And that they actually found that 3 of them, they really had concerns that there could be a high level of risk that the reimbursements would be questioned by either us as the municipal auditors or the federal government. The federal government still has the option of auditing these funds. So they had a high level of concern with 3 of them. And of course, the other thing that they found was local governments are interpreting the federal guidance differently. Well, you look back at all the different federal guidance that was issued and when, it was hard to keep up. I mean, I felt like every week we were looking, is there some update? Is there some update? So it was always hard to know, am I looking at the most recent guidance? And as the guidance itself sometimes was rather vague. And so there was going to be some differences in how governments interpret these rules and how these funds should be used. So there was challenges there. One of them, 3 of the local governments that were reviewed with the highest payroll costs, they were just carte blanche asking for the full cost of all safety and public health personnel, but they didn't do anything to track hours. And they had little documentation to support what the COVID-19 related work was that the employees were doing. So it was very important to have good documentation about what people were doing with these times that they were being funded with CRF funds. Some of the other areas that they found issues with were personnel leave expenses. The funding allowed for additional payments or supplement payments, I guess, for family medical leave and sick leave. There was concerns about the detail that was being provided there in the records. They found significant errors in just sometimes mathematical errors, sometimes in double counting. You had one cost being captured one area that was allowable, that same cost being captured in another area that was deemed allowable. So the reimbursement was really paying the same thing twice. And of course, there were some classification errors on the input to the state system. And of course, just sometimes they had just overall an incomplete documentation of how these funds were being used. So, I want to bring these out in terms of, well, if DAS is providing limited guidance and limited monitoring, it really falls then to us as the local auditors to be looking at these things. So we had challenges last year. I mean, I think everybody who in the course of last year's audit had to audit this. We had a lot of head scratching sometimes of exactly what our role should be and how we should respond to things. So let's kind of look back, and I think, we can take from that some lessons learned, because what was the Corona Relief Fund last year, I think in the near future, ARPA is the new CFR. For those of you who don't know what ARPA is, that's the American Recovery Plan Act. And this thing has a vast amount of funding that's going to be coming out, particularly in the coronavirus state and local fiscal recovery funds. So that is providing across the country $130 billion to be split between cities and counties across the US. So that's going to really put a lot of money into the hands of local governments. And when we start looking at Oregon, they're still figuring out the doling out of all the money, but for the Oregon counties, these are the amounts that are being allocated to Oregon counties. So I know some of you are our clients and are on this list. And of course, some of the largest ones are going to be Multnomah County getting $158 million roughly. But some of our clients, Yamhill County, you're going to be getting $20.8 million. Benton County, $18 million. I mean, these are some big numbers of dollars that are being made available to you. And of course, all these things, we have the question of what are going to be the rules on this? And then in Oregon cities, now the Treasury on May 13th released the allocation to what they call metropolitan cities. And so these are the allocations that have been verified as being allocated to these cities here shown on this slide. City of Albany is on there. One of our clients, one of our new clients is Lebanon. You can see there how much money has been allocated to them under ARPA. But then just a few others here. There is a preliminary numbers that were put out by the House committee overseeing these funds. And these are some of the amounts that basically other of our clients are going to be receiving under these funds. So, like I said, ARPA is going to be kind of the new CRF, because the question is, once again, we have to look at, well, what's the uses? Well, they say that the use of these funds is to support public health expenditures, address the negative economic impacts, provide premium pay for essential workers, and invest in infrastructure. So all of these are types of things that may be funneling through your organizations. But these are very broad terms. So, whenever you have broad terms, it seems like that's an area of higher risk for non-compliance, because we don't know necessarily what all that means. What is supporting the public health expenditures in COVID-19 mitigation efforts? How far can we go to address the negative economic impacts? This is going to be probably one of the largest challenges, particularly as we move forward into 21-22 fiscal years, as these funds are being allocated out to everybody. So on May 10th, at least this time, they provided us a little bit earlier rules. So on May 10th, the Treasury issued what they call the interim final rule. Now, I really kind of hate that term. I mean, I know what an interim rule is. It means these are the rules for now. I know what a final rule is. That means these are the rules and we're going to live with them. An interim final rule, that to me sounds like these are the rules until we change our mind and tell you something different. But the guidance is 151 pages long. I will be the first to admit, I have not read them all. I read sections of them. I've already entertained several questions regarding the revenue replacement components of this. It's a document I think all of you, if your organization is receiving these, you should go on to the web and find this document, and you probably should read the whole 151 pages just so that you are aware of what the rules are, because that's what we as your auditors are going to be looking at. And we're also going to be looking at in terms of updates that may be coming along. So we will just have to keep our eyes peeled on this one. And of course, one of the questions that comes up early is, will the ARPA funds be subject to the requirements of the single audit under the uniform guidance? That question has not yet been answered. I checked just this morning to see if it's been answered. As of yet, today, it is not. Most places are saying, we believe it will be subject to single audit. The OMB, Office of Management and Budget, in a memorandum, they encouraged other federal agencies to say, if you're handling these funds, make it the uniform guidance apply to these funds. So right now, we're pretty sure that it will be subject to single audit, but we don't know for sure. But regardless, I think there's going to be some compliance requirements that have to be considered. And in every audit, as auditors, we're looking to see, are there other compliance requirements associated with this revenue? Because if you don't comply with them, could that create a material misstatement in the financial statements? So as auditors, we have to consider, are you using these funds appropriately? Whether it's subject to single audit or not, the question is just how much work we have to do on it. So really, when it comes to the ARPA, I think that the answer is we have to stay tuned. We're going to be monitoring this here at the firm. As information comes along, we'll be pushing it out to all of you. But as I said, really, ARPA is going to be the new CFR for this year. Anyways, that's kind of looking kind of a look back at the big issue of 2020. And a little bit of a look forward into 21-22. So at this point in time, I would ask if there's any questions that anybody has in the chat. I don't see any. Okay, well, it is noon by my watch, maybe a couple minutes early. But we are going to now break for an hour for a lunch break. Please be back promptly at 1 o'clock. We'll start right at 1 o'clock. And of course, I'll be presenting after lunch, our favorite topic right after lunch of the GASB update, which I'm sure after you've all had a nice fulfilling lunch, you just can hardly wait to stay awake for all the details of our GASB update. So thanks a lot, and we'll see you back at 1 o'clock. Welcome back, everyone. My clock says 1 o'clock, so let's get started with our next session. I'm sure everybody is absolutely thrilled with the idea of spending the next hour talking about what's going on with GASB these days. So we need to start someplace. So let's start with what FASB gave us last year. So last year, FASB gave us a gift of deferring the effective date of various pronouncements. So we should look at those and when they are going to be required to be implemented by you. And a couple of them actually should have already been implemented. So we're going to talk about those, and then we'll talk about some of the things that are the GASB is currently working on, and other standards that have been issued after this, the items that were deferred by statement number 95. So statement 95 postponed the effective dates first of GASB 83 and 88. Now, GASB 83 and 88, it postponed the effective date to periods beginning after June 15th, 2019. So if you get your calendar out, that means that actually would have been, those would have been applicable for June 30, 2020 fiscal years. But we should look at those because there are certain things that we want to make sure are being considered every year, and just to keep us up to date on certain disclosures required. Then we will talk about GASB 84 and the fiduciary activities, GASB 90 with majority equity interests, 89 with accounting for interest, 92 omnibus, 93 the replacement of interbank offering rates and what that means. We will spend quite a bit of time talking about GASB 87 on leases. This will be the biggest one we have to deal with in the very near future. Then we'll talk about GASB 91 and conduit debt. And just so you know, with these standards, many of them had complementary implementation guidance. Those were also deferred or their effective dates. So let's just dive in and see what we have to deal with when. So first one is GASB 83, which is asset retirement obligations. So as I said, it's deferred implementation was for periods beginning after June 15th, 2019. So last fiscal year. But we have to keep in mind, okay, when we have, what are we talking about as an asset retirement obligation? Well, there are two elements for it. One, there has to be some sort of legally enforceable liability associated with the retirement of a capital asset. So you have a capital asset, you're using it currently. When you go to retire, there has to be some legal obligation that's going to require your entity to have cash outflows to retire that asset. And the result, these liabilities arise just from the normal operation of the asset. It's not anything extraordinary. It's not something being used outside of its normal use. It's just the regular, ordinary operation of the asset creates this liability. So those are the two elements that are important to remember. Now, this liability would only be appearing on those financial statements that are on the full accrual basis. So that would be the proprietary, if you're reporting under GAAP and not modified cash basis, you'd be reporting these on the proprietary funds and on the government-wide statements. So those are the ones that this will apply to. Has nothing to do with how you account for things on your budget actual basis, which is what most of you keep your budget on, your general ledger on. And it's recognized when two events: when the liability is incurred, and secondly, when it can be reasonably estimated. And let's talk about those concepts for a minute. So the liability is incurred when you have both an external and an internal obligating event. So external ones are, there's some legislation or some regulation out there, might be new, might be existing, could be something in a contract that you enter into. It even could be a court judgment. So something external happens that basically is going to impose a requirement on your organization to, as I said, make cash outflows when you try to retire a particular capital asset. Internally, it's from the normal operation of the asset, as I said before, and things like this can come from either a contamination. Certain assets, just by their very nature, will cause contaminations that have to be remediated when the asset's retired. It could be a pattern of incurrence, just as you go along using the asset, there's costs that are going to have to be incurred to basically repair anything that asset caused. And in some instances, just merely placing the asset into operation will obligate you to make certain outflows when you go to retire the asset. So we have to have both these events in place before we would have an asset retirement obligation. So the liability should be based upon the best estimate of the current value of the outflows that are expected to be incurred when you go to retire the asset. So essentially, you're looking in terms of, okay, if we think we'll use this asset for, say, 10 years, and after 10 years, we go to retire this asset, we're going to make certain cash outflows just to get rid of this asset. And in doing so, we have to look at it in terms of probability weighting. So we should look at things like, okay, what's the best case? What's going to be the least cost that we're going to incur? What's maybe the worst case? And then maybe take, okay, what's the most likely case? And in those cases, then we want to make some sort of probability calculation and use that to weight those potential outflows. And then bring that back to a present value. Somebody's asked the question already. Have any of our clients identified any of these? So this was implemented last fiscal year, June 30, 2020. And we really looked heavily at this question, particularly cities with wastewater treatment plants. And we really looked hard at it. And we even went and talked to the Oregon DEQ. We could not identify that there was that element of an external obligating event that would create this. Combine that with, these wastewater treatment plants, typically you're not going to see those things just, retired and put out of service. They might be reworked, they might be improved, they might have additions to them, but generally speaking, they aren't just going to go away. So we did look really close at this. But these are the types of things we always are going to want to be looking each year. Has there been any of these events that could create this asset retirement obligation? And then in which case we have to go through these type of calculations, looking at is there what are the potential outflows in the future? And then we would need to bring that back to a present value using an appropriate discount rate. Now, if you do have one of these, you've gone through the calculation, then the next question is, okay, well, how do we record this? What's the mechanisms of this? Well, first thing you're going to initially record a liability and a deferred outflow for a like amount. Then going forward from there, annually, you're going to look at that asset retirement obligation liability and see if you need to change that estimate based upon, changes that may have occurred. If it's before retirement, you simply adjust the deferred outflow and the liability. If it's after you've retirement and you're in that period of time when you're making those cash outflows, any changes would immediately become a period expense. Now, the deferred outflow that we record, that would be expensed in a systematic and rational manner over the life or remaining life of the asset. So essentially, you'd be amortizing that deferred outflow over the life of the asset. The liability would stay there until you start actually making the cash outflows. The deferred outflow is going to be a cost of the periods that the asset is in use. So the main thing is, you know, as I said, we want to make sure we are keeping an eye out for these. We don't always know when one might occur. So typically your auditors every year are going to at least visit with you briefly. Do you believe that anything has happened that would create an asset retirement obligation? And if you think you have one, contact us so we can talk about the details of it and get that set up appropriately. So like I said, this would be one that we always want to keep kind of at the forefront of our thoughts as we move forward into the future. Okay, the second one that we should have already been implemented last year was on debt disclosures. And the nice thing about this one, this is a disclosure only type of a pronouncement. It doesn't require us to change any of our underlying accounting or the financial statements. It's simply additional disclosures and how things are disclosed related to debt. And of course, the first thing GASB want to do is say, okay, well, we think we know what debt is, but let's make sure we're all on the same page. So they actually give us a definition of debt here, which is on your slide. Essentially, it's like contractual obligation for future cash outflows that are fixed as of the date it's established. It does not include leases, except those that are reported as financed purchases. When we get to GASB 87, we'll talk about that a little bit more. But essentially, debt does not include leases. So the disclosures they want to have is if you have outstanding lines of credit, they want to know how much is available to the organization at the end of the year. If you have any assets pledged as collateral, that's information they want disclosed. What are the types of events that could cause the for the organization to be in default? And so, you know, basically, typically it's as long as you're making payments, there's no default. But there might be some other requirements, some covenants, or some other provisions related to the debt that could cause it to be going to default. Because if it goes into default, obviously it's all currently due and payable immediately. Like kind of very similar to that is termination events. Are there events out that could occur that would cause it to immediately be callable? And what those financial consequences are, and if there are any subjective acceleration clauses associated with the debt. And then the easiest part of this was on the footnotes related to debt. They wanted the disclosures to separate information between direct borrowings and direct placements and other debt. Direct borrowings and direct placements, that's where your organization needs so it needs to incur some debt for something. And rather than issuing general obligation bonds or revenue bonds, something like that to the general population, you go to a bank or some other financial type of institution, get a loan directly from them, or it could be from U.S. government. U.S. government provides these loans. State of Oregon provides these loans. Those are direct placements and direct borrowings. Other debt would be all those things that are put out there to the general public that the general public could invest in. So those are the things we should have dealt with last year. Now, GASB 84 fiduciary activities, the deferred implementation period is for periods beginning after December 15, 2019. So that means for the period beginning July 1, 2020, ending June 30, 2021, these apply. This one applies. So this standard goes through and talks about how you identify fiduciary activities, and then how do you report fiduciary activities. And they have a very sophisticated model of looking at fiduciary activities in terms of, well, you got to think that a fiduciary activity should largely be a separate entity. And as such, you look at separate entities, well, we already have some information on other standards about that, looking at potential component units. So really they're applying the component unit type of logic to when you need to be reporting a fiduciary activity. So they talk about that in great detail in the standard. And there was not a lot of change in terms of the types of fiduciary funds. So we still have pension and other employee benefit trust funds. So if you have your own pension plan, or you have your own OPEB trust, where you're funding some of your OPEB liabilities in a trust, those will be reported in this first category. Investment trust funds, we don't generally see that too much here in Oregon because the state of Oregon runs it in the state and local government investment pool. But investment trust funds are one of the fund types, as well as private purpose trust funds. And that's where your organization is given money that is to benefit a certain number of specific individuals or organizations. They're private purpose. So you basically take on the funds and you're saying, okay, we'll use these only for these individuals or this population or this organization. And the only change really here is now, rather than the term of agency funds, we have this new thing called custodial funds. And essentially, they operate the same as the agency fund. However, there's going to be a slight change in the reporting of those. So fiduciary activities are reported in two statements. One is the statement of fiduciary net position, which is basically going to be assets less liabilities equals fiduciary net position. And now there's going to be and there's also a statement of changes in the fiduciary net position. What's important to note here is that they want a statement of changes in fiduciary net position for all fiduciary fund types. So previously, our agency fund, we'd only report a statement of fiduciary net position. Now we're also going to have a statement of changes in fiduciary net position for those custodial funds. So that is change. And they are saying, they want these things to disaggregate the additions by source and the deductions by type. So they don't want any netting going on. They want these things at gross amounts. With one exception, for custodial funds, if items are typically expected to be held 3 months or less, you can aggregate the additions and deductions into single amounts rather than getting into details. So those are the kind of changes there that you would see. There's a couple other nuances because they said, now hold it, sometimes you have business type activities and enterprise funds that may have some things that kind of look like they should be in a custodial fund, but they don't really hold them very long. It's things that are held for 3 months or less. If that's the case, you have business type activity in the enterprise funds, and it's held for generally, so it could have one that goes over, but generally speaking, if they're held 3 months or less, you can simply report those as an asset and liability on the statement of net position for your business type activity and enterprise fund. So that's kind of a unique item there. Now, if you do have that, you still would need to be reporting the statement of cash flows. If these are significant amounts, you would want to be reporting separately the additions and deductions on the statement of cash flows as an operating activity. So I said, if it's significant, which means it has to be a big enough number that people might want to see it separately. So that's kind of the exceptions to these new reporting requirements for fiduciary activities. Now, I'm not going to spend a lot of time on GASB 90 here, majority equity interests, simply because I don't think you'll ever find one in Oregon, but you never really know for sure. So this is one that, if you had this, should have been be implemented for the current fiscal year we're in, for the year ended June 30, 2021. Essentially, it's where your organization obtains a financial interest in a separate organization that's evidenced by ownership of shares of stock or by some sort of other explicit measurable right to the assets of the organization. Say you became a majority owner of an LLC that's organized as a partnership. So you don't have stock, but you certainly have a measurable right. This applies only to majority interests. So if you have minority interests, you can ignore that. Majority interest means, of course, 50%, well, more than 50%. As I said, I don't think we'll ever see this. If you ever find yourself in this position, call us. We'll talk about the requirements at that point in time. But I said, I don't expect to see this very often here in Oregon. GASB 89. I like this one. This one was a short and sweet pronouncement. It was so easy to, it'll be so easy for us to implement. So it is deferred until periods beginning after December 15th, 2020. So the first time will be beginning July 1, 2021. And so we'll first reporting it in June 30, 22. It does apply to both full accrual and modified accrual basis statements. And the bottom line is interest cost incurred before the end of a construction period when you've borrowed to basically acquire or construct an asset. That interest expense should be a current period expense or expenditure. So the bottom line is GASB is saying do not capitalize interest expense. I mean, this statement was like maybe 5 paragraphs long. It was the shortest one. And it's one of those things that it clarifies some disparity in practice that has been out there. So bottom line, do not capitalize interest. Okay, now comes along GASB 92. So this is for periods beginning after June 15th, 2021. So once again, this will be first applicable for our year ends June 30, 22. And it covers a variety of little things, basically making technical corrections to prior issued statements. You know, none of these are such that they needed to issue a whole new statement. They just kind of bundled these together, called it an omnibus, and threw them out there. First thing it did was it deferred the effective date, or it clarified the effective date of GASB 87. But even with that, you know, GASB 95 pushed that off even further. And it talked about intra-period transfers of assets to defined benefit plans. Typically, we aren't going to see that very often. It clarified some things regarding post-employment benefits. And then one of the things it did talk about, going back to our asset retirement obligations, they did provide guidance on when a government acquires an asset from another government that already had an asset retirement obligation embodied in it, and how to account for that. Talking about risk financing and insurance activities or public risk pools, some clarification on non-recurring fair value measurements, and then it clarified terminology related to derivatives. Most of these things, like I said, these are very technical corrections to existing standards. Really nothing that I think would apply to very many of our instances here in Oregon, but just let you know, they are out there. Here's an interesting one, GASB 93 in replacing interbank rates. So many governments have entered into agreements that somehow tie part of it to an interbank borrowing rate. The most common one is LIBOR, the London Interbank Offering Rate. And essentially, you have a lot of agreements out there that refer to LIBOR. And the bad news is LIBOR is going away. That has a sunset now. And if that's going away and your agreements have addressed, you know, have referred to LIBOR, you're going to be in a position where we have to change that. We have to go back to that agreement and we have to replace that with some other type of rate that we can objectively obtain. And really the effects of this need to be, it will be most felt in terms of if you have any hedging derivatives. Now, I'm pretty sure that none of you have any hedging derivatives. If you have them and you haven't told us about it, please let us know today after our meeting. I don't think you do, but please let us know. We have a whole bunch of other things to talk about. But sometimes lease agreements in terms of escalation clauses might refer to changes in the LIBOR. And if that's the case, those agreements will have to be looked at and those rates will have to be replaced. Okay, here's the big one. GASB 87 on leases. We've been talking about this for a number of years because this is going to be a significant change in financial reporting. It does apply mainly to the full accrual financial statements. And we're going to be starting implementation of this come July 1, 2021. So not for this year, but for next fiscal year, we will have to implement these this new pronouncement. We had one client early implement last year, and that was a good learning experience for us and the client, looking at the nuances of this standard. So first thing to know is that operating leases and capital leases, those terms are gone. So we should no longer be talking about things of it's an operating lease or a capital lease. Those are gone from GAAP at this point in time. And what they defined a lease is as a contract that conveys control of the right to use somebody else's non-financial asset as specified in the contract for a period of time in an exchange type transaction. The key element there really is it conveys control. When you look at the GASB definition of an asset, one of the key elements is that the government controls the asset. And the GASB has already provided in other pronouncements, when you're looking at an asset that perhaps maybe two different governments have put money into, well, you book it and report it for the government that has control of the asset. So that control element is very important to the overall concepts here for having a lease. Now, they do exclude certain things from this. So intangible assets are excluded. So it has to be something tangible. Biological assets are excluded. I suppose if you are leasing certain types of livestock, for instance, that would be excluded. Leasing, say, timber lands or that type of thing, that would be excluded. I've never seen anybody lease inventory. I don't know exactly how that would work, but they do say inventory that's leased is excluded. Service concession arrangements, many of those might look like a lease, but they're really a service concession arrangement, and that we have another GASB that talks about those. And then going back to kind of the concept of conduit debt, if the underlying asset is financed by conduit debt, it's excluded. And then finally, supply contracts. I'm not sure why a supply contract would necessarily be included here, other than sometimes a lease might have a component that is a supply contract. So those are excluded from the provisions of the standard here. So somebody's asked, what's the definition of control? And essentially, the definition of control is going to be who has the right to use that asset fully, coupled with the obligation to maintain the asset. You start to look at control. That's actually defined better in GASB concept statement number 4. When they talk about in great deal about this concept of when does an entity record an asset. So you kind of have to look at that, who has the access to the asset for use and who has the obligation to maintain it. One of the elements of that obviously is also ownership. Who owns an asset. If there's clear ownership, obviously that's tantamount to control. So a lot of things to consider there, but essentially, you're looking at who do you have the ability to use that as much as possible. Okay, a key term for implementing this standard is what is the lease term. We're going to use this a couple different ways. And so we have to look at in terms of the lease term is where there is the period of time where there's a non-cancelable right to use the underlying asset. Okay, and this is on both sides of the equation, both the lessee and lessor. So it's that period of time when you have a non-cancelable right, but many times these lease agreements have extension clauses. And the extension clauses may be at the lessee or lessor's option, but you have to look at it in terms of, okay, I enter into a 5-year lease and the lease agreement allows for a 5-year extension. Well, I have to look at it in terms of what's the chance that that option is going to be exercised. Likewise, the lease might have a termination. So maybe I enter into a lease for a 10-year piece of property, but they say after 5 years, either party could terminate the lease. Even though we have planned for 10 years, we're giving everybody an out after 5 years. So you have to look at in terms of what are the chances that those periods are going to be part of the overall lease term. So we really have to know and determine that up front. And always remember this, if both the lessee and lessor have an option to terminate and walk away without permission from the other party, those periods are going to be cancelable periods, and those are going to be excluded from the lease term. So, it's really important that we fully define the lease term before we go too far down the road to determine how to properly account for this thing. So the first thing they say, if it's a short-term lease, where the lease term, at the commencement is less than 12 months or less, okay, including any options to extend regardless of the probability of being exercised. So 12 months or less, it's going to be a short-term lease. And essentially, short-term leases would be accounted for just like they are now for an operating lease. Basically, there's no asset booked, there's no liability booked, it's rent expense at the time you pay it, and both parties can walk away on a month-to-month basis. Essentially, is this is going to be treated as. So your typical month-to-month leases will fall under this short-term lease standard and will not have to be have any of these other provisions applied. The other thing they talk about is if the contract will transfer ownership by the end of the lease and doesn't have a termination option, then that's reported as a financed purchase for the underlying asset. I'd say kind of capital lease, but we don't want to use that term anymore. It's now a financed purchase under a contract. So going back to that debt disclosure that I was just talking about, this is what they were talking about. So if it's a financed purchase, that is considered debt. Even though it's maybe in the form of a lease agreement, essentially you're buying the asset over time. So if it's not excluded, it's in here. So other leases. So at the commencement of the lease agreement, the lessee should recognize a lease liability and at the same time an intangible right to use lease asset. So the lease liability, we have to go back to that concept of what's the term, and what are the expected payments for the term of the lease. And we're going to need to present value those back, and that would be the amount that we record as a lease liability. On the other hand, the asset, this right to use asset, that would be equal to that lease liability plus any upfront fees and costs required to put that asset into service. So there could be times when the asset is more than the lease liability because you've made additional cash outflows that go into the overall amount of the asset. So when you're looking at that term, you have to consider that which extensions are going to be expected to be exercised. You're going to have to possibly estimate payments. Many times leases will have escalation clauses in them. It might be tied to CPI or something like that. Well, if those are the case, you're going to have to say today, well, what do we think, future escalation amounts will be? If at the end of the lease there's some sort of a purchase option, well, that's an outflow associated with this asset. So we have to consider, well, are we most likely going to pay that amount or not? And how much will it be? That's part of that overall string of cash outflows into the future. And do you have any residual value guarantees? Sometimes on these agreements, you agree that the lease, this thing will be at least worth some certain dollar amount. Well, you have to consider those as all part of the payments under the lease term. And you're going to discount those now. First, if you can determine some sort of implicit rate in the lease, you would use that discount rate. Many times you're not going to be able to. So otherwise, you're probably in a position where you're going to be estimating what your organization's incremental borrowing rate is. In other words, if you had to go to the bank today to borrow a like amount, how much, what would be the rate that would cost you? So kind of have to do these calculations to determine that lease liability. So we made the calculations. We have a lease liability now that we've recorded. What are we going to do going forward? Well, we're going to amortize payments that are allocated to principal and interest expense over the time period of that contract. So every payment will have some component of principal that reduces the liability, some component that will be reported as interest expense. The leased asset, on the other hand, we're going to amortize that in a systematic and rational manner over the shorter of the lease term or the useful life of the asset. And typically I kind of wonder, how many times would I be willing to enter into a lease for a term longer than I expect the useful life of an asset? I don't think that'll happen all that often. Of course, with if you're leasing maybe computer equipment, where we know technology is changing so rapidly, even still, it might not have the same time period. So yeah, Mike from Yamhill County, he was able to go on, look up exactly the definition of control. So the question is, whether a contract conveys control of the right to use the underlying asset, a government should assess whether it has both of the following. A, the right to obtain the present service capacity from the asset as specified in the contract, and the right to determine the nature of the use. So those would be the type of things you'd be looking at. Now, also going forward, you might have to remeasure the liability. Now, because the liability might change because things could change. I mean, maybe there's a both parties agree to a modification agreement, changing the lease term. Maybe there's changes in the residual value guarantee. Maybe there's a change in the likelihood of exercising a purchase option. Or sometimes there's a change just in the estimates of the payments that are going to be made. Maybe we expected inflation under CPI to be a certain percent. Turns out it's not going to be that. We need to readjust this. So when that occurs, basically the liability is adjusted and a same amount would be adjusted into the asset. And then you would re-amortize both of those things based upon, with the asset, future remaining life, under its, original determination, and the liability based upon future principal and interest payments. Lessors. We've been talking about all the lessees. Well, lessors, actually, if your government is leasing property to other people, you're a lessor. Here, you would recognize a lease receivable at the present value of the lease payments that you expect to receive during the lease term. So any payments reduce the receivable and produce an interest revenue item for you. And then at the same time, you would record a deferred inflow. So that would be recognized as revenue in a systematic and rational manner over the lease term. So really they're kind of treating these more and more like it is an underlying financing of that asset. So the accounting is being consistent with that. Now, all that applied to the full accrual basis. However, they do say this on modified accrual basis statements. The lessee at the inception, you would have an expenditure and an other financing source in the period the lease is initially recognized, with the other financing source being the present value, that liability you're going to book. That's going to become your other financing source. And of course, the expenditure would be equal to that, plus whatever additional costs you had to make during that period. So that would be your expenditure side. If you're a lessor, at that point in time, you would recognize a lease receivable and a deferred inflow of like amount on just like you would on the full accrual statements. So modified accrual does have an impact. Now, I know the next question people will ask, well, how does this affect my budget to actual statements? And the Oregon Department of Revenue is the one that tells us how to properly, basically account for things on a budget actual, because they're the ones that have the responsibility for interpreting local budget law. Well, they have not published any definitive rules. I looked on their website. I've looked at some of their presentations. I haven't seen anything that they come out absolutely. So I kind of started looking, well, what do some of the underlying laws state? So the first thing, of course, is that municipal corporations will record its revenue and expenditures using one of either the cash basis, the modified accrual basis, or the accrual basis of accounting at the discretion of the municipal corporation. So, you're in your records, you have to be recording it on one of those bases. They go on to define further the modified accrual basis, which is the basis of accounting adapted to the governmental fund type measurement focus. And then they go on to talk about, under this basis of accounting, revenues and other financial resource increments such as bond proceeds are recognized when they become susceptible to accrual. That's when they become both measurable and available to finance expenditures in the current period. And I found it very interesting that the local budget manual issued by the Department of Revenue, they specifically include the term lease payments as part of their definition of materials and services. So basically, I look at this in terms of, well, the guidance is not clear, not quite sure what it all should be. So as an auditor, I'm going to take a position as, if you've budgeted for it either as you would under modified accrual, where you've recognized both the liability and the the deferred I'm sorry, the other financing source and an expenditure, or instead you're treating it as a material and service cost in the period in which you make the payments. I'm going to say I'm willing to accept either one of those at this point in time, because the Department of Revenue has not issued definitive rules on this. And just conceptually, I look at it in terms of, if I've gone along all year completely in compliance with my budget, and in the last week of June, we enter into a new lease agreement, whose first payment isn't going to be until July of the following, next fiscal year, even though it's the next month. Should I have to record this large expenditure, perhaps, causing me to be out of compliance with my budget? I have a hard time doing that. So it's going to be one of those things that we'll have to look at on a case-by-case basis. What I'd say is be consistent. If you do it one way, do it always that way. Don't pick and choose. So once you start doing it one way, I would say be consistent. Okay, now of course with any standard, there's going to be disclosures. Have to have disclosures, can't get away from them. So they want just a general description of the leasing activities you're involved with, the total amount of leased asset, any accumulated amortization on it, major classes of underlying assets, is it equipment, is it building, what is it? They want, principal and interest schedules to maturity, very similar like we have with debt. That's, a 5-year detail and then 5-year total increments after that. And amounts recognized in the period not previously included in the measurement of the liability, if any of those things occurred. So those are the disclosures required. Now, there are specialized disclosures if you get into some certain situations. One of them is if you have subleases, or sale leasebacks or leasebacks. So if you have any of those, there's specific disclosures. I'm not going to go into detail with them here because we don't see those all that often. But if you do have these types of situations, talk to your, you're in charge, and I'm sure they'll talk to me, and we'll figure out how to properly account for those things and have them disclosed. On the other hand, for lessors, once again, they want a general description of your leasing activities. They want to know how much revenue you recognize in the current period, and then any amounts recognized in the period not previously included in the measurement of the receivable. And if leasing is a principal part of your operations, where this is the main thing you're doing, they want to see principal interest to maturity. Same way as the liability would be 5-year detail and then 5-year aggregate increments from there forward. But like I said, it has to be a principal part of your operations. So typically we won't see that too often. And of course, there's specialized disclosures in certain circumstances. We've talked about some of these. So we would always want to look at those if necessary. One of the things is sometimes these leases are multiple agreements kind of bundled together in a single contract. You kind of have to take that thing and pick it apart, how much, and treat each component as a separate contract. So like I said, a supply contract is a separate contract not covered by these standards. So say you're leasing copier machines, and part of that lease agreement is that the lessor will be providing you supplies. Well, that's a separate contract. So you're going to have to take your overall contract and try and, divide that thing between the two components and treat them separately. So the final thoughts on this standard. First thing, inventory your lease agreements. If you are paying something on a regular basis, on a monthly basis, and you're coding it to rent, you at least need to, inventory those things. Secondly, you really do need to consider materiality. I am pretty sure that no user of your financial statements will ever care if you're leasing a postage machine. it's too small. It's just not a big enough deal. Think material, those things are material. So really consider that, as you implement this, and recognize that estimates are going to be integral to the implementation of this. So we're all going to have to get very comfortable having estimates. That in the past we've had estimates. Maybe other people are giving us those estimates under either the pension standards or OPEB standards. Now these are estimates we're going to have to come up with. So we'll have to dust off our crystal balls and kind of look forward into the future. So as I said, GASB said, this is the big one. We're going to spend a lot of time in the next year, make sure we have these ducks in a row. Okay, GASB 91, conduit debt. First thing, I don't see this very often again here in Oregon. We have a few, but essentially this has been deferred for periods beginning after December 15th, 21. So that means we'll first implement it for July 1, 22, reporting June 30, 2023. So conduit debt is essentially where a debt instrument is issued in your name, but it's for the benefit of somebody else, and that other party is basically going to be the ones that make the payments on the debt obligation. So typically, you don't record anything. You ain't recording a liability because you're not on the hook for it. However, sometimes there might be some commitments you've made. Maybe you've said, well, if you can't pay it, we'll step in and pay it. If that's the case, then there might be the need to recognize a liability associated with these additional commitments. And you kind of have to look at it on, what's the likelihood of this occurring? Do I think we're going to have to make these payments? And the answer is, I certainly hope not. If there are payments you think you're going to have to make, well, once again, we're going to be looking at a discounted present value of those estimated future cash outflows. Like I said, I hope we don't ever see any of these, where you have to record a liability. Obviously, you won't be issuing conduit debt unless you have pretty good assurance that the third party will be able to make all the payments. And once again, the only time this affects a modified accrual basis is in the case where you're going to have to make a payment that's already due because the other party hasn't made the payment. In that case, you really should be reporting a liability and an expenditure for that amount that really is due and payable currently that you're going to have to step up and make. Otherwise, we shouldn't see anything on the modified accrual basis statements. Once in a while, conduit debt can involve leases. Not very often, but you have to think about, a lease agreement, a contract is essentially a type of debt, so it could be, but not very often. And of course, there's a whole bunch of disclosures. I'm not going to go into those in great detail here, some because we don't see these all that often. If you do have conduit debt, you probably are well aware of it, and we've already looked at what the requirements are. So those are all the standards that GASB deferred implementation of. But just remember, GASB doesn't just sit around on its hands. They're always busy coming up with new things for us to consider. So they have issued some new standards. First one is GASB 94 for public, private, and public-public partnerships, otherwise known as, PPPs. And essentially, these are arrangements where, I'm a government, and I'm going to contract with, and I have an asset. But I don't have to have a handful of operating it. So I'm going to contract with an operator of the asset to provide public services I'm going to give them the right to control and operate or use that asset over a period of time in an exchange-like transaction. So it sounds almost like a lease, but it's really not, because I still retain ownership of it. I still maintain control of parts of it. I'm conveying the right the control of the right to operate the asset only. Instead, these can happen between a government and a non-governmental entity, or could be between two governments. And of course, there's specific types of accounting and disclosures associated with these. We have time for this one. This is not going to be effective until we have July 1, 22. So there again, we'll be reporting first time June 30, 2023. If any of you want to avoid implementing this, you can target your retirement date accordingly. GASB number 96. This is one that, related to, current technology changes. Subscription-based information technology arrangements, which is a fancy way of saying cloud computing, really. And when you enter into an agreement for cloud computing, essentially you get a right to use an asset, an intangible asset that basically is allowing you to access and use somebody else's IT infrastructure in the cloud. So you're going to have, once again, an asset and a liability, and we're going to have some note disclosures associated with it. Once again, we'll be dealing with this come June 30, 2023. And then the final one we'll talk about today is GASB number 97. So the concern was in looking at things like, component unit rules and some of the rules regarding pension plans and fiduciary activities, the question came up, what about those 457 plans? Are those things part of the reporting entity or not? And so they issued this standard. I think largely it will say, unless your organization actively is involved in the management of those funds, it will be excluded from your reporting activity. Most of these 457 plans is, essentially the employee has amounts deferred and into a contract that they've entered into with a third party. Essentially, it's just one of those employee benefits you have. So typically the governments are not actively managing those 457 plans. However, if they are, this is where this could come into play. So we'll be looking at your 457 plans in the next year, just to see if we do have something that we need to consider changing. So just think, remember, when your auditor's there and they ask about 457 plan, don't be surprised. Okay, couple other things that GASB's done. They did issue a technical bulletin 2020-1, and it had a whole bunch of questions and answers regarding the CARES Act programs and other COVID-related issues. Interesting read, nothing that's really earth-shattering, and nothing I think that would change anything of what any of you have done in the past. So then GASB is working on some current projects. The first one, so for some of you, you have in the past issued comprehensive annual financial reports. And for years and years, we have always referred to that using an acronym of CAFR, C-A-F-R, CAFR. Well, it came to GASB's attention that in certain certain other nations, particularly South Africa, the term CAFR is a highly offensive, derogatory term for certain racial groups. In South Africa, using that term can land you in jail. So it is highly offensive in certain countries. So GASB, it has a project, and I expect this to come out fairly quickly, to rename the comprehensive annual report to the annual comprehensive financial report. So we'll start referring to them as ACFRs. So that's kind of one of those things that cropped up here just in the last couple months. So they are continuing work on their financial reporting model reexamination. In fact, they are in deliberations currently, looking at responses to an exposure draft. So I would expect to see a statement from GASB looking at, revamping some of the things in the financial reporting model, probably within the next 12 months. They have a larger project in the works on revenue expense recognition, just really looking at, do we really know and have good rules as to when you should recognize things? We forever and a day have, used the idea, well, you record an expense or expenditure when a liability is incurred. Well, what does that really mean? They're trying to, drill down because, people start to nitpick these things apart. So they really want to have good guidance on when you should recognize transactions. They're looking at some changes to accounting for compensated absences and the overall disclosure framework. I mean, government financial statements have more disclosures in them than anything else. I mean, the footnotes go on and on for even the smallest of organizations, even if they are maybe on a modified cash basis. So they're looking at, do we really need to rethink our overall disclosure framework? So those are just some current projects that GASB has in place. So if you're keeping track and keeping score, we only have 2 standards that we have to deal with currently for this year. I'm pretty happy about this because one of them should never apply to us, majority equity interests. The one that we got to deal with this year is your fiduciary activities, which really I think can be implemented very easily. So I kind of view, last year we got away of not have to do a lot, except over, considering the changes to the debt disclosures and whether you had any asset retirement obligations. This year, we really are going to be dealing with, do you have any changes to the fiduciary activities? So that is the GASB update. And that's a lot for right after lunch. Thank you for listening to me for an entire hour on that. Lots of things going on. So I am now going to turn it over to Nicole Bourne. Nicole's going to share a few things with us regarding work from home edition for audits. Nicole, you're muted.
Sorry about that. Let's start over. Hello, everybody. Good afternoon. So I'm going to be talking about the working from home edition for your 2021 audit. Last year, we kind of got thrown into working remotely or partially remotely. And so we learned some things along the way that we found helpful. We also learned some things along the way that were not helpful. So we're trying to make improvements on those things and make this audit season run smoothly. So let me start by saying that we miss you guys. A lot of us have gotten into auditing because we like being out with the client, like interacting with you guys, finding ways to help improve processes. And so we just want to let you know this isn't fun for us. We really like being out and working with you and getting to have those conversations one-on-one. So, but since things are not that way, we want to take our efforts and put them into making things efficient to get the audits done in a timely manner. And so if you have ever been at our Muni Client conferences before, you know that one of the things we always talk about is being prepared for your audit. You might be sick of us and sick of hearing about it, but every year we'll probably talk about it just because of the importance. And every year there's some things that have changed. So last year, in lieu of our meeting, we sent out a newsletter. And in that newsletter, it kind of described the process of what we do to schedule our audits. And typically, in May, we take our schedule and plan for June through December. And so a lot of our weeks are filled up back to back to back to back to back. And so in that newsletter, we had an illustration of client A. We request client A to provide the general ledger, trial balance, check register, information like that by August 9th, which is 2 weeks prior to their audit date. Now that in charge was scheduled the week of August 9th to be working to plan for that audit that week. Well, when client A didn't provide the information that week and provided it instead on the 16th, that in charge was already scheduled for another audit, and they are dedicating their time to the scheduled audit. Which means when the 23rd comes around, the week of the audit for client A, the in charge is having to basically plan for that audit. Now, not only is the in charge not prepared for the audit, but the in charge has staff that are waiting to get started on the audit. And so this kind of creates a domino effect of if it's not prepared, then staff have to wait, and then staff can't wrap up their audit because they had to wait to get started on it. So it's just this trickle effect, and it pushes the audit out and the audit completion date out. So one of the things that we really need your help on is getting things to us by the date that we request them by. SureLink has those reports that it'll send to you now, letting you know when the requested items are due. So we really appreciate your effort in getting things provided to us by your given due date. The other thing that's super helpful is having selections pulled and ready for us. If we're coming out to this client site, having them ready for us on day one. And if we're not coming out to the client site, having those scanned and uploaded to SureLink ready for us on day one still. It's really helpful in helping us just hit the ground running when we are scheduled to work on your job. And then finally, the last thing is we understand that when we're out there, we're interrupting your day-to-day schedule. You have your normal daily tasks that you have to do. So when possible, if you can arrange your schedule to be available for us for questions, that would be great. If you know you have meetings in a day, letting us know in advance so that we can plan our work around providing you questions, or if we know that we're going to need some information, getting those to you prior to your meeting. It's really helpful. So we understand that you have your normal day-to-day activities going on. So just these are kind of some things that we found to be helpful in making things go smoothly. So the big and most important thing, in my opinion, is really good communication. It's really important in general, but when we're doing audits remotely, it's even more important. You know, in the past, we're used to having our staff all be in the same room. We hear the conversations that are going on. We hear the conversations with you that are happening. And so the in-charge is really aware of everything happening. I think one of the things that I personally struggled with last year is I had my staff emailing the different staff at the district, at the entities, and that wasn't necessarily even the finance manager, maybe some of their staff, requesting information. And so that breakup of communication and closing the loops was a little difficult. So we've been trying to make sure that the in-charge on the job is CC'd on emails so that they can stay in the loop of what's going on. If you're responding to emails, please make sure to hit that reply all so that all the participants stay in the loop of it. Also, if you're going to pass on information that we've requested to somebody else on your team to fulfill those requests, if you can communicate those with us as well, that'd be really helpful. I know that a lot of times we send you a bunch of emails. You might be getting emails from 3 or 4 of us. So if possible, if you could respond to them acknowledging that you have received them and you're working on them, that's great. A lot of times we don't ask again, assuming that you've seen them, and then we've had situations where they got missed because if you're like me, you probably got 10 or 20 or maybe hundreds of unread emails in your inbox. And so sometimes things are easy to get passed over. So that would just be really helpful for us if you could respond. That way we don't hound you. We don't hound. That way we don't remind you of things that you're already aware of. And then the other thing that we have found to be super helpful is using Teams meetings. So while we have been using email as kind of that main form of communication, so we're keeping our distance from you guys, we do miss that interaction. Sometimes when you're emailing back and forth, it's something that could have been solved by a 2-minute conversation with a couple follow-up questions. So Teams is what we use at SingerLewak to provide this, kind of like a Zoom, so we can have general meetings. It also allows us to do some screen sharing. So sometimes when you're when we're working on a spreadsheet and we just need to be looking at the same thing because you can't explain it through an email, it just gets too complicated. Screen sharing allows us to be able to look at the same thing at the same time. Also, a lot of our clients have implemented some controls within their IT systems, and you can't really, show us how that works. So being able to do this screen sharing rather than us standing over your shoulder, being in your bubble, this is a better way that we can, still be able to have that two-way communication, but keep our distance at the same time. And then just because you don't see us doesn't mean we're not there. And yes, that did sound a little creepy to me too. But I just want to say that just because you do have some staff working on site doesn't mean that we don't have other people working remotely. Last year, we had a number of people who had children at home doing school remotely. We still have some in that case. Some of you might have people working remotely. So just because you don't see everybody on site doesn't mean that everybody's not there. So please keep in mind that electronic documents and things like that are really helpful because we may have people working outside of the people who are on site. And the in-charge will try to do a good job of letting you know if there are people working remotely on your job. That way everybody's just on the same page with that. And then some workkeeper best practices. For us, electronic is always best. Unless we're talking about invoices or supporting documentation that have approvals, things like that, scanned is perfectly fine. But when we're talking about trial balances, general ledgers, check registers, documents that you keep in Excel, if you can either export those to PDF, Excel, CSV files, please don't print them and then scan them to us. We have software that allows us to be able to analyze this information, and so when it is in the pure form, it allows us to be able to do that rather than having to manipulate things by hand. So it's really helpful to try to get these things electronically. Also, when you are sending us information, if you can do this by uploading through SureLink, I know a lot of times it's just easy to email back and forth, but if you can please upload to SureLink, that way the entire staff have access to the information that you're sending. Sometimes things are needed for multiple sections and different people are working on it. That would be super helpful. So to kind of summarize my quick little presentation, being prepared for the audit really helps to keep our schedule on track and with us completing jobs on time. Jessica mentioned that we have software conversions this year as well. So just as much as you can help to be prepared on your end helps us to keep things moving along this year. Communication is key. Dare I say, over communicating is better than not. We just having that open communication, knowing each other where everybody's at and where things we're waiting on is really helpful. SureLink is going to be really helpful in allowing us to have kind of that what things have been provided and what things are still outstanding to look at. But even that email communication and that letting us stay on the same page throughout the audit is super helpful. And just because you don't see us doesn't mean we're not there. We might have a few people working remotely, and then electronic work papers whenever possible is super helpful. So thank you. We are looking forward to having hopefully a little more normal audit season, but we'll still be working on our social distancing. So, but anyway, we're looking forward to working with you, and we'll see you soon. And it's back to Brad now.
Thank you, Nicole. Appreciate that. Okay, for our last session today, what we want to talk about now is, the single audit. And I'm going to say maybe not just the single audit. It might relate to even when you are not subject to single audit. So, we subtitled this, "Why did I take that money?" Because sometimes you're going to wonder, was that such a good idea in the long run? So you have to remember, we've already talked about the amount of money that the COVID pandemic has resulted in terms of financial assistance being provided to state and local governments. In addition, 2020 was such a great, this whole fiscal year has been such a great year because, not only were we dealing with the COVID-19 pandemic, well, many of our communities were affected by wildfires back in September. And then, in this winter, we had a nice ice storm. And all those things, sometimes with the damage, there was federal funds that are available to be used to either, remediate the damage, or in some cases to provide hazard mitigation. So anytime you're getting money, the idea of there's no such thing as a free lunch, that's really the case with federal money. There's always some strings attached to it. And the problem is the auditors have a responsibility to test compliance with requirements. So, we have to know what the strings are, and we have to make sure that you are appropriately complying with the requirements. So really, when it comes to key to this is there's three things. One, know the rules. And because you can only comply with things if you know about them. And it's your job to essentially comply with the rules. So you got to know what those rules are. So we're always going to say, know the rules. Secondly, establish proper internal controls over compliance. Jeremy talked a lot this morning about internal controls related to financial reporting in operations, but there was that other slice there in that cube that said compliance. So we need internal controls over compliance, and those controls may be substantially different than what you have for the financial reporting aspect. And then the third thing is maintain documentation. You have to be able to demonstrate objectively how the funds were expended. So let's talk about the rules for a second. Now, I will still see occasionally, it's been a while, but I actually saw one in last year where a request for proposal actually referred to audit and compliance with OMB Circular A128. Well, that has been gone since 2003. I will see a lot of them still referring to OMB Circular A133. Well, A133, that's been gone since 2014. So, we shouldn't be seeing those references. So if you're looking at that guidance, anything associated with those, that's gone. Shouldn't be referring to that. Everything really now is under what's called the uniform guidance. And the uniform guidance contains rules not only for the federal government and for pass-through entities, it also has rules for recipients and subrecipients and for the auditors. This is a one-stop shopping place to find out the rules. And associated with the uniform guidance is something called the compliance supplement, which is actually considered an appendix to the uniform guidance. So everybody says, okay, well, how can I find out the copy. Where can I get my copy of the rules? Well, I have there the URL that I always go to. It's an electronic format, accessible off the web, easy to go through. If you try and print this document out, it is a very long document with a lot of small print. I find it easier just to refer to this Code of Federal Regulations on the web. And then the second thing is the compliance supplement. Now, the compliance supplement is issued annually. You know, sometimes it's issued in June, but typically we see it sometime in the July-September time period. The compliance supplement will deal with specific federal programs, whereas the uniform guidance is kind of overarching type of guidance. So we want to spend some time today talking about the rules that apply, because the thing about it is that it applies to all federal assistance. So the uniform guidance is made up of 6 subparts. And the first thing they start with is definitions and acronyms. And there are tons of acronyms in this. So you kind of got to sometimes use that as a dictionary to understand what the heck they're talking about. There's just some general provisions, some pre-award requirements in contents awards that's kind of made more focused at the federal level. Post-federal award requirements, that's looking at both federal and recipient and subrecipients. Cost principles definitely is looking at recipients and subrecipients. And then finally, the 6th part, Part F, that addresses the auditor's requirements and also some of the recipients and subrecipients requirements. So we want to just touch base on some highlights here. We are not going to go through this in detail. To go through this in detail is an 8-hour class, and I don't think anybody today really wants to talk about it for the next 8 hours. So first thing to remember is this. The terms and conditions of federal awards flow down to subawards and subrecipients. This means you have to comply with these regardless of who you are. If you're getting federal money, you have to comply with these requirements. What really it says is, when you receive that first dollar of a federal award, you have to comply with all these provisions. It's not if you go over a certain dollar amount. These provisions that are, except for subpart F, these provisions apply with the first dollar of a federal award. So it's really important you know about this so you can properly comply with the requirements. So when we look at these, what do you need to pay attention to? Well, Part A and B kind of applies to everybody, because you got to know the definitions and the general provisions. Part C talks really to the federal awarding agencies. There are a few paragraphs that apply to everybody. Subpart D and E, recipients and subrecipients. If you don't read any other part of the uniform guidance, you should read subparts D and E. And then finally, subpart F, this applies when you have expended $750,000 or more of federal awards within a fiscal year. So, like I said, subpart F only applies at that level. Everything else applies with the first dollar. So, what are some of these important rules, that we have to apply? Well, first thing, you have to have a financial management system that's sufficient to permit the preparation of reports required by general and program specific terms and conditions, and tracing the funds to the level of expenditure adequate to establish that the funds have been used in accordance with the federal statutes, regulations, terms of the awards, etc. So essentially, you have to have in your financial management system a way to ensure that things are being expended appropriately and to keep track of them. They say embodied in your financial management system, you should be able to identify all the federal awards received and expended, and under which program they were received. So every federal program has an assistance listing title and number. And that number is a 5-digit number with 2 digits, a period, and 3 digits. The 2 digits refer to the federal department or agency that is the originator of these funds. And the 3 digits are a program-specific identification. There might be other identifying numbers associated with it. Need to identify the year, because sometimes these programs have bookends of when you can use the money. So there would be beginning and ending periods. So you have to identify what year does this belong to. And many times you're receiving these funds from a pass-through entity. So you need to know, okay, I'm getting this money from the state of Oregon. Well, I need to know whether that's federal money or not. And I need to know, what federal, what state agency is giving me this money, because, essentially responsibilities flow uphill. You're responsible to the state agency to ensure that you expend the funds appropriately. The state agency is responsible to the federal government to ensure that the funds are expended appropriately. So you have to be able to identify these things in your accounts. Also, you have to be able to identify and complete the disclosure of the financial results. Every program at some level has some sort of reporting requirement. And so you have to be able to demonstrate clearly that how the funds were used and the results of the use of those funds. So sometimes it's financial, sometimes it's performance type of reporting. But each of these programs will have some sort of reporting that you have to do. So you have to know what that is and follow those rules. Okay. You also have to be able to identify, what were the specific expenditures associated with this? What income, if any, was generated? Maybe if you get money up front, you might have some interest that you earned on that. And everything has to be supported by adequate documentation. So, it can't just be, estimates and that kind of thing. You actually have to have some sort of document that supports how these funds were used. Going back to Jeremy's discussion, effective control and accountability for all funds, property, and other assets. So you have to have in place internal controls to ensure that the assets that you receive, the money you receive, is used solely for authorized purposes. This is all part of your financial management system that you agree to have when you take that first dollar of federal money. And finally, many of these have a budget, so your system should be able to prepare a comparison of actual expenditures with budget amounts for each federal award. Additionally, and this one's really important, okay? So your financial management system says written procedures to implement the requirements of section 200.305. So first thing, written procedures. It's not just good enough to say, this is how we do it. No, you actually have to have a written document that says how we're going to do this. So you look at section 200.305. So this says that, if you receive payments, then you have to be able to minimize the time period between you getting the funds and when you expend it, when you make the disbursement of those funds. You need to have written procedures how you will minimize that time period. And also, you have to disperse funds available from program income and other types of things earned on those funds before you go asking for additional money from the federal government or the pass-through entity. So written procedures. If you don't have written procedures on this, right there, you're out of compliance, because it says you have to have a written procedure. So if you don't have it now, go back to your offices and write up something and have it approved by somebody at your organization. Here are written procedures on how we minimize the time period. Some of these operate on a reimbursement basis, and you might just come up with a policy. We're going to always operate on a reimbursement basis if we can. Otherwise, if we get upfront payments, here's our procedures to make sure we minimize that time frame. Second area where it says you have to have written procedures. Written procedures for determining the allowability of costs in accordance with subpart E of this part and terms and conditions of the award. So subpart E talks about allowable costs. So you should have within your systems a written document detailing out the procedures as to how you determine that costs charged to federal awards are in fact allowable. And of course, it says you must establish and maintain effective internal control over the federal awards. So there's reasonable assurance that you're using these funds for the program that they were awarded. This is all part of those internal controls that have to be considered. So when you look at that, going back to that cube that Jeremy showed you earlier, in this right-hand slice here, the compliance. So we should be looking at what is your overall compliance control environment. How important is this to the organization actually comply with rules? Have you gone through a risk assessment and asked yourself, okay, we have all these rules. What's our risk of not complying with them? And then the control activities, what types of things are we having people do to make sure we're in compliance? And how are these things communicated? And then how do we monitor, make sure all this stuff is working? And what's really important, I think, on this is you can have one at the entity, you can have this at the entity level, but how many organizations here have different departments, each with their own federal programs? So each time, you keep breaking it down, it's like, well, so a particular department might have, 1, 2, 3, half a dozen different federal programs that it operates. Well, what's that department's written procedures? And what is their internal controls? It can break it down all the way down to, individual programs to make sure that you have adequate controls in place. And said, the controls over compliance is not the same as the internal controls over financial accounting and reporting. Okay, so you can have a system in place that says, okay, every single invoice is approved by one person. The approval is reviewed by another person before it is entered into the accounting system. That's great and wonderful. Okay, but the question comes to my mind is somebody somewhere has to make a decision. This item is chargeable to a federal program. Do you have a control in place to ensure that that decision to charge it to that program is appropriate? And do people know about it? And that's just under allowable costs. We'll talk about compliance requirements here. There can be other types of compliance requirements. Some programs have a concept of eligibility. Then in order for somebody to receive services under a program, they have to meet certain eligibility requirements. So then go back. What's your controls to ensure that only eligible individuals receive it? And are those controls properly designed and implemented? So they are different from the financial accounting and reporting controls. Another thing we see all the time. So many times you receive federal awards and you get equipment or other property for it. So this says you have to maintain property records for those items that you have received federal awards to purchase. You need to keep that. You'll identify those in your records. So property records of those things acquired with federal money needs to be maintained. You're supposed to take a physical inventory every 2 years. And obviously you need to have systems in place to ensure you don't lose or they're damaged or they're stolen. And have adequate maintenance procedures. And at the end of its useful life, you have to have procedures for the disposal by either sale or otherwise. So the equipment management system also becomes very important to have. This is a big area, procurement. So many times you're buying something under this, either goods or services. So you have to have proper procurement procedures in place. Now those can be consistent with state, local, or tribal laws, or under the federal government has specific requirements. So you have to you just can't go out and just buy anything with these monies. You have to have a process for awarding contracts. And what's important here also, once again, is you must maintain records sufficient to detail the history of the procurement. In other words, if you have the need to buy a piece of equipment under a federal award, and perhaps you can just get quotes on it. Well, this says you have to maintain records of how many quotes you received, who did you solicit quotes from, and how you made a determination of how to award it. I've seen it time and again. We got there in the audit and they say, oh, we didn't keep those records. We just called up people. Well, sorry. The requirements are you maintain that documentation. As auditors, we're looking at if this applies, we have to see, did you comply with it? Well, if you don't have that record, we can't determine whether you complied. So we're going to say, well, obviously, we can't determine that. So you're going to have a finding, whether you complied or not, because you didn't maintain the documentation to support the compliance. Now, it's not all based on you. Now, the state of Oregon has gotten a lot better, but once in a while I still get them caught up in this is, when the state of Oregon receives money and they pass it through to you, and it's federal, they have a requirement to do certain things. One, they have to clearly identify to you that it is federal money, and give you the federal award identification information, including the federal award amount, the assistant listing, when they give it to you. Them not doing that really creates problems for you, because if they don't tell you it's federal money, how will you ever be able to comply with this? Like I said, the state of Oregon has gotten much, much better at this. But it wasn't that long ago where I swear, the state of Oregon would change its mind on things, says, oh, that's not federal, and then it turns out it is federal. They're doing better at it. But the question is always for you should be, you should know whether or not you're getting federal money or not. It's not for us as the auditors to determine whether you did that or not. That should be your job to identify when you got federal money. Now, we'll talk about subpart E here briefly. We could spend all day on it, but in kind of an overall, just common sense approach is costs charged to programs need to be necessary and reasonable for the purpose of the federal award. A common sense type of thing. Some things, of course, are going to be automatically excluded. You can never have it. Other things, there might be some question about it, but essentially it comes down to, is it really necessary and reasonable for the program to accomplish its purposes for this cost to be charged to it? Of course, you have to be adequate. It has to be adequately documented. How you determine things were chargeable to the program, and whether they were incurred during the approved period of the grant. So I know this was a number of years ago. I was had the task of auditing the a transportation system, and the transportation system was getting money from the state of Oregon They would submit a quarterly online, request to the state of Oregon. The state of Oregon would send them reimbursement. And so I was looking at the reimbursement requests, and I went back to the client and asked, okay, so how did, what's the documentation to support these costs they were claimed? And the first response back was, well, I'll have to get that for you. And I thought, oh, why do you have to get that for me? I mean, so I waited for a little bit, and I asked, okay, so why is it taking you so much time to get this to me? He says, well, what we typically do is I just go online onto our GL system. I look up, the amounts on our GL system. I enter it into the system, and I submit the request. So, as an auditor, I think, okay, we certainly have several issues here. Number one, documentation was not maintained to support the amounts claimed. That's the first problem. Second problem is, if one person does an entire process, do you have internal controls associated with that? So if they're just going on, submitting it, and that's it, what's the control? Somebody else should be looking at that. And then, of course, the problems that we found was, well, they would just kept looking at each quarter, the general ledger each quarter individually. Well, what had happened actually is that, they would look at it at the quarter end, do the report, then there were adjustments made to the general ledger that affected that period that they just reported on, that now moved costs away from there. And now we have too much costs claimed. So a whole host of problems. So really, you got to make sure things are adequately documented. You have internal controls. So there's a whole section here in subpart E, 56 paragraphs about different things, different, costs, specific things, and rules on allowability. Some things they say no, some things they say yes, some things say it depends. But there are some things that we need to really think about in particular, because these are some troublesome areas that we see issues with all the time. First one is compensation. Now, first thing, it has to be reasonable. Now, I know most places here, we don't have an issue with unreasonable compensation of people, but it does need to be reasonable. And it specifically says it has to be documented. The compensation that you charge the federal programs has to be documented, supported first by a system of internal controls. So you have to have good internal controls over your whole payroll process to ensure that people are being paid appropriately. So the appropriate amounts are being charged to federal programs as appropriate. They should reasonably reflect the total activity of the employee. Some employees work on multiple programs. Some employees will work on some federally funded programs, some non-federally funded programs. Some people are just paid out of general monies. But you should have a system that supports the distributions of the employee's salary or wages based on actual hours worked. So, and they're very clear on this, very clear, that budget estimates alone do not qualify as support for charges to federal awards. I've seen this more than once where, I say, well, this person was charged the federal award. It looks like 25% of the wages. And they say, yes. And I said, how do you determine the 25% wages? Is it that's how it was budgeted? And I'm thinking to myself, okay, right there, I have a finding. You can't use the budget estimate alone. You can use it as kind of an interim to get things going. They do allow that, but at some point in time, you have to go back to actual hours worked on programs and do a true up of what they actually did versus what the estimate was initially. So if you're just using budget estimates, that does not qualify as adequate support for compensation charged to federal programs. So this is one of those areas that we have a tendency to see a lot of issues. Now, we've kind of talked about, where you can find the general rules, which is in that uniform guidance. So I hope everybody goes home and at least opens up that website and looks at it and begins to become familiar with those things. But in addition, those are kind of overall. You have to look also at what's the program specific. Every program has its own nuances. So I always tell people, you're trying to figure out what the rules are. Well, you should know the general rules, but now let's look at the specific rules. Where can I find those? Well, many times just read the grant agreement in full detail. I know some of these get really lengthy. As auditors, a lot of times we have to read documents in detail. I remember one year, not too awfully long ago, we were out at a city and we were doing an audit, and actually the guy who was doing auditing debt, they had a new loan. And so he just, of course, new loan, new debt, I need to look at the document. So he's reading it, going through it, about page 5, it says right there, the source of the funds is a federal award. All of a sudden, we're in a single audit position. The client didn't know it. So if they don't know that they have this federal money, how are they going to ever be able to comply with all these requirements? So we'll have a problem, we'll have findings. So always read the grant agreement in detail. Somebody somewhere in your organization should be reading them in detail. And if you got federal money, make sure you know what the rules are in that grant agreement. Another resource is sam.gov. This has general information on specific programs. All the programs are listed in there. It's general information on it. Might give you some clue. Is there something I need to be doing here? And then finally, you can look at the compliance supplement, which, as I said before, is an appendix to the uniform guidance issued annually every year. So you should always be looking, is there something in the compliance supplement I should know about? So you got to look there. Now, the compliance supplement doesn't list every single federal program. It lists the majority of them. So the majority of the money that is awarded on federal awards is covered by that, but there are some outliers that are not always included in the compliance supplement. But you should always look there. Is there something there in that for this grant? Okay. Now, the federal government has broken this down into certain compliance requirements. So these are the things you need to be thinking about, because the auditor is required to audit this. So in order for the auditor to audit it and you get a clean audit, well, you got to know what you need to comply with. So the compliance requirements that are broken down for us are activities allowed or unallowed. So for every grant, they give you the money and says, okay, it's for this thing. Well, if the money is for this thing and use it for that thing, well, that's an unallowed activity. So you have to make sure you're using it for activities that are allowed on the grant. Allowable costs and cost principles, that's the detail there in that subpart E of the uniform guidance. So you got to make sure you're complying with that. Cash management, that's that idea of whether or not you're getting funds up front and minimizing the time period between when you get it and when you expend it. So cash management can be a compliance requirement. As I said before, eligibility. Many grants do have an eligibility requirement. Do you have things in place to ensure only eligible individuals are getting benefit from this grant? Talk briefly about the equipment and real property management. Do you have requirements to have a property management system that can identify these as federally funded assets? Matching level of effort in earmarking. This is a little different because many times the government will say, we'll give you money for this, but we aren't going to give you all of it. You got to cough up other money to match. So sometimes it's a percentage, sometimes it's a specific dollar amount. But looking at matching, level of effort talks about some federal programs are designed to supplement what you already should be doing, but you can't use those federal funds to supplant your own funds. So level of effort means, regardless if federal funds are there or not, you would maintain a certain level of effort for an area. And then earmarking is just, funds come in, they're for this, you're using it for that. Make sure that those are all working. Period of performance, as I said, many of these grants have bookends, a beginning and an ending. Look at the CFR we talked about earlier. We had a beginning, March 1, 2020. Ending initially December 31st, 2020. That was your period of performance. You didn't expend it during that time period, it doesn't count. So many times these grants do have a period of performance. You need to know what that is, so you make sure that things that fall outside of that aren't charged to it. Talk briefly about procurement and the requirements under that. So procurement, are you following proper procurement procedures as a compliance requirement? Suspension debarment basically also says, there are some entities you shouldn't do business with. Some people have done bad things in the past, and basically they are no longer allowable to receive federal funds through contracts. They also, in the latest issue of the uniform guidance, they do talk about not doing business with the enemy. There are certain foreign organizations that you cannot do business with, period. So, suspension debarment can become an issue. Program income. Sometimes the operation of a program will generate other funds from outside people. That's program income. Like for instance, talking about that transit district I was auditing before. Well, they collected fares. Well, those fares are program income. The operation of the program itself generated this income. That has to go back into the program. As I said before, most of these have some sort of reporting requirement. I don't know one that doesn't at some level have some sort of reporting you have to do. So reporting may be a compliance requirement. Should you be in the position where you get money and you pass it on to another person or another organization for them to make expenditures, they're a subrecipient of you. Well, when you have done that, you have a responsibility to monitor a subrecipient's use of those funds. Just like the state of Oregon, when they give you money, they expect to see how did you spend it. You have that same responsibility. You can't just pretend, hey, it's gone from us, we're done. No, you have a responsibility if it's a subrecipient. And then, of course, there's a very general, broad one, special tests and provisions. This is going to be specific to each grant. You have to look at that if something applies. Now, the good news of all these is not all of these apply to each and every program. Your job should be to go through this list for each federal program and determine which of these do apply to that federal program. Because if the compliance requirement applies to the federal program, you should have internal controls to ensure you comply with those requirements. So that's part of your overall risk assessment that you're supposed to have as part of your internal controls. Some of these you can say, well, it does apply, but there's such a low risk. For instance, there's such a low risk that we will ever contract with somebody who is on the suspended or barred list. We aren't going to bother with that. That's fine. But it's part of your overall internal controls, that risk assessment, determining which of these apply and to what extent you need to comply with them. So, as I said, for each federal program, you need to identify the compliance requirements, got to establish internal controls. You have to be able to verify that you did comply with those requirements, and you have to maintain appropriate documentation for those items. And as I said, this applies to each federal award, and that starts with that first dollar of federal money you received, whether you are ever going to reach that $750,000 threshold or not. These things apply to that first dollar. So you really have to know these things and take the time to analyze them appropriately. As I said, if you expend more than $750,000 or more during a fiscal year, now all of a sudden you have to have a single audit, or as they call it, a program-specific audit. That'd be in the case where you have one program only, and that has expenditures. over 750. So most everybody has to have a single audit. Now, just because you're supposed to have a single audit, that doesn't just throw everything onto the auditor's side. There are still some responsibilities you have under some Part F. Of course, the first thing is you should engage a firm to do an audit in accordance with uniform guidance. There again, that goes back to those requests for proposals that I've seen to say, yeah, we'll engage you to do an audit in accordance with A133. And I always say to myself, yeah, I can't do that. You're gonna have to engage me to do an audit in accordance with uniform guidance. And it is different. You're required to, or should be able to, prepare the financial statements that include the Schedule of Expenditures of Federal Awards, the SEFA. So you think that if your accounting system has already been able to identify all the federal awards and expenditures under it, this should just be a report you print. But that is your responsibility. Also, follow-up and corrective action on findings. Auditors, I hate issuing findings. I really do. I don't like to have to do it. But if we have to, we will. But you have to be able to follow up and take corrective action on those. And you are to provide the auditor with access to the personnel and information to do the audit. You can't stonewall us. If you don't provide us the access to the information and personnel, we're going to have some modifications of our reports, which may not bode well for you for future federal awards. So the good news is we won't audit every single program. First thing, if we did, we'd be there forever. You don't want us there forever. The uniform guidance does provide the auditors a risk-based methodology for selecting the programs to test. That's one of the first things we try and do. That's why we always ask, can we get the SEFA as soon as possible? Because we have to look at that in terms of, okay, we got to determine which items we're going to test. Because there's a lot of planning that goes into testing all these things. You think about it. We identify these programs that we have to test. Now, we have to go learn something about them so we can determine the compliance requirements you should have and learn how, about the rules that you have to apply. So, there's a lot of work that's involved in these. So that's why we always are asking for, the Schedule of Expenditures of Federal Awards or something similar that we can use as early as possible, because we have to really plan the audit. Okay, so even if you're not subject to single audit, if you've received, awards, grants, and that if there's material non-compliance having a material effect on the financial statements, auditors still have to check that, whether you're subject to these, uniform guidance subpart F requirements or not. If non-compliance get a material effect on the financial statements, we have to still test that. And just to give another little bite to this, Oregon law under OAR 162.10.280 says we have to test compliance with laws, regulations, rules, so forth, pertaining to programs funded wholly or partially by other governmental agencies. So we have to determine overall, did you comply with things? Were you doing the things right? So under state law, we have this requirement. So either way, we're looking at these at some level, maybe not as detailed as if we're doing the single audit under uniform guidance, but we still got to look for these. So really, in summary, if you got $1 of federal money, you should know what the rules are. 2, you got to establish those internal controls. And 3, you got to document it. So that kind of is the summary for the single audit. At that point in time, it is now, according to my watch, 2:59. We have now come to the end of our program. I do want to take a couple minutes and thank all our presenters. And I also would like to, there's a person in the background here that has been helping us out all along, Nathan Morrison from SingerLewak, who their marketing department actually, who's helped us put this on. So I want to thank Nathan. Want to thank all our presenters today, Jessica, Nicole, Jeremy, Bob, and Lynn. So I want to thank everybody for attending this. I am hopeful that next year this will be a in-person presentation. We'll all get to see each other in a big room without social distancing, and we look forward to a successful audit season. So thank you everybody for attending.